So all the students who are in live, could you confirm me whether audio video is clear? Audio video, is it clear? Good evening all. So today our topics are like exemptions and ITC, sir. Sir, actually in exam, like sometimes even in the exam questions, they link certain RCM related points also, and there is a little scope of even asking it from composition scheme also. But sir, today we may not cover like the charge chapter part and all. We'll cover exemptions and ITC only, but like tomorrow we'll have time, because tomorrow the chapters we are having are like what, TDS thesis, and the next one is like time of supply. So since those two are like little small chapters only, we'll have time there. So tomorrow we'll cover even the charge topic as well. Okay, so exemptions. So without wasting time, so I'm going into the exemptions part. So the power to grant exemptions. The power to grant exemption is there under section . Okay, power to grant exemption. There are like two sections, sir. 11 subsection 1, 11. I mean, the power to grant exemptions will come under section 11. I mean, by using the power given under section 11, central government will notify based on the council recommendations the exemptions. Okay, so 11 subsection 1. So these are like the general exemptions, considering the public at large, which are like more useful or more needed for the public at large. Those will be given as like exemptions, such as like education related, health related and all. And then 11 subsection 2, like exemptions which are of like issued by way of special order. These are also for public interest only, but were issued in exceptional nature. Like let's say a particular state or a couple of states are suffering because of floods or due to earthquakes and all. So to provide relief to those particular states and all, there may be, I mean, for a temporary period, exemptions will be given. So that is under 11 subsection 2, special order. Whereas 11 subsection 1 are the general exemptions which will be given. And then 11 subsection 3 says like any explanation inserted, sir, there is an exemption issued, but that exemption can be viewed in multiple ways. Okay, that exemption can be viewed in multiple ways. Okay, I mean, interpretation can be made in multiple ways. So to provide clarity and to tell what is the exact view of department, they may clarify it, okay, by introducing what, an explanation. So even though explanation introduced at a later date, that explanation will have what, retrospective effect, provided it should be issued within 1 year from the date of issue of exemption. See here, sir, exemption issued when on 1st April, whereas explanation issued on 15th December, but still this explanation will be considered as if it is there from 1st April, as if it is there from 1st April. Okay, then services by an artist. Services by an, I mean, now we are into exemptions, sir. Now, the first service we are discussing is about service by an artist. Where an artist performing in folk, classical or art form. Sir, only in these forms, sir. Folk, classical, art form of music, dance or theatrical performance. Folk, classical or art form of music, dance, theatrical performance. I mean, it could be folk music, classical music, folk dance, or even could be classical dance, and even any art form of music or art form of dance, and even it could be theatrical performance. Theatrical performance na any play kind of, like any skit, drama. So those things, if they are playing, they will come under here. So okay, where an artist is performing in these folk, classical, art form, music, dance and theatrical performance, for that if he or she, the consideration receiving is like within 1.5 lakhs, within 1.5 lakhs, then the entire consideration is like exempted. If it is above 1.5 lakhs, then the entire consideration is like taxable. Okay, so in question, how they will give, sir? They'll give like so and so person, he is a artist performing folk dance, and the consideration received is like 1 lakh, fully exempted. 2 lakhs, fully taxable. Okay, the same person, sir, if he performs western dances and all, then what? Fully taxable. Sir, these days all these like music directors like Anirudh, Taman, okay, DSP, so they are also providing certain musical shows. Okay, when they are performing in any musical shows and all, they will not come under folk, classical or art form. It's okay. So even Ilayaraja, so all these will come under, all those will not come under the folk, classical, art form. So when they perform in those musical shows and all, how much ever the consideration received, that is what fully taxable. Okay. However, exemption is not available where the artist is acting as a brand ambassador. Where the artist is acting as a brand ambassador. Sir, why? Sir, understand here. Brand ambassador means what? Sir, he is like a professional classical dancer. He or she is like a professional classical dancer only. For performing the classical dance, if they earns any remuneration and for show or for any event, if it is less than 1,50,000, exempted. But with that popularity, they have been even promoting a brand, like it's okay, they've been promoting a particular brand and all, acting as a brand ambassador, then the consideration is not exempted. It's okay, only for performing in those dance or music or theatrical performance, that also in folk, classical, art form. For performance, if they receive remuneration within 1.5 lakh, that only is exempted. For promoting a brand and all, if they get any money, that is what? Taxable. Okay, then we are into charitable and religious activity related services. First one, an entity should be registered under section 12AA, 12AB or 1023C of Income Tax Act. It should be registered under where, sir? 12AA, 12AB or 1023C of Income Tax Act. Then only it is called as first a charitable entity. Then they should be providing charitable activities related to health, advancement of religion, education, environment, spirituality, yoga. Understand, sir? They are providing charitable activities related to what? Health, religion, education, environment, spirituality, yoga. So in these areas, if you provide charitable activities, those only exempted. Okay, just like as in movies, like there are some blind people, if you help them in crossing the roads and all, or like old age people, you help them in crossing the roads and all. Okay, so all those, okay, for dogs and all, you feed biscuits and all those will not come under charity here. Only these things like related to health, advancement of religion, education, environment, spirituality, yoga. Sir, the basic question you should come is, you should get is like, sir, charity, there won't be consideration, no. If there is no consideration, first it is not even supply, unless they are covered under Schedule 1. Sir, Schedule 1 talks about 4 points only. What are those 4? Principal and agent. Next, permanent transfer or disposal of business assets on which ITC has been availed. Then third one, like between related persons and supply of goods and services, or both between related persons or distinct persons. Fourth one, import of service without consideration from a related person in the course or furtherance of business. But Their charity, these things are not covered, right? It's okay. So when there is no consideration, these are not even supply. Then why we are discussing about exemptions? Sir, understand here, charity need not to be always completely free. They'll conduct medical camps where, let's say for a surgery which costs 50,000, they may charge only 3,000, 4,000. It's okay. You can see like mostly in like Andhra Telangana, we'll see like these Rotary clubs will be there, where for elderly people and all, they'll do these eye operations and all at a concessional cost. Usually for this eye treatments or eye surgeries and all for the elderly people, it may cost some 20, 30,000 and all. But these Rotary clubs and all, they'll do it or they'll get it done for 2,000, 3,000 for that nominal cost only. So that also comes under what? Charitable. Okay, so charity doesn't mean completely free. Charity can be even at a subsidized cost or at a lower cost. Okay, those comes under charity. Okay, it would be related to health, religion. So religion in temple, that entry tickets, puja tickets, all those will be there, right? That's called advancement of religion. Then education also. Okay, sir, education, when it comes under charity means when the education is being provided to abandoned. Abandoned means, sir, parents are there but they couldn't raise a child, so that's why they abandoned the child. And they are like orphans. Orphans no parents at all. Then homeless. Okay, they live on like streets and also those people. And persons of age more than 65. For these people, if education is provided, then it comes under charity. Okay, not like, see, we see like this Christian missionary schools and several trust-run schools and all. They all not will come under charity. Okay, it will come under charity only when the education is provided to abandoned, orphans, homeless and persons of age greater than 65. I mean to senior citizens in the rural areas. And then environment, okay, protection of environment related, spirituality related, sir. So, okay, so these days like for spirituality and all, so spiritual classes and all, for that also there are like several programs are there, like 7 days program, 21 days program, 42 days program, where they will be charging 15,000, 20,000 like that. So all those amount collected as exempted. And yoga, advancement of yoga. Okay, so then all these will come under what? Charitable activities. They are what? Exempted. Understand, sir? Who has to provide charitable activities? An institution registered under 12AA, 12AB or 2023C of Income Tax Act. Then only in these areas like what? Health, education, environment, religion, spirituality, yoga. Okay, then they are charitable related and they are exempted. Next one, sir. Specified organization providing religious pilgrimage. Sir, what is meant by religious pilgrimage? Religious pilgrimage means the devotional tour. It's like, okay, in Telugu, Tirtha Yatra. Okay, so, and then religious pilgrimage, sir, if at all like, sir, there are private tour operators also like Make My Trip. So Make My Trip is also like Make My Trip, Southern Tours and Travels. All these are like what? This tour operators only. But they provide any religious pilgrimage, taxable only. So the pilgrimage has to be provided by only these two people, KMVN, Hajj committees. And KMVN also not to any place. KMVN, if the pilgrimage is for Kailash Manas Sarovar Yatra, then only exempted. Sir, KMVN only, but planned or provided a religious pilgrimage to Tirupati or to Kasi or Ayodhya. So all those are taxable only to where Kailash Manas Sarovar Yatra. It's okay. Then Hajj committees, when they provide to Makkah, then only they are exempted. So only these two institutions, which are those two? Hajj committees, KMVN. And the tour also to be provided to where, sir? KMVN not to Kailash Manas Sarovar, Hajj committees to Makkah. Then only these are what? Exempted. Then services provided by a person by way of conducting religious ceremony. Sir, if any religious function or religious thing has to be done now, who is the main person? Priest. So the services provided by priest are like what? Exempted. Services provided by a person by way of conducting religious ceremony. Then renting of religious premises owned and managed by a 12AA or 12AB entity. 12AA or 12AB entity. What, sir? They are like renting of religious premises. Sir, they are renting like rooms for stay. If the rent is less than 1,000 per day, exempted. If it is equal to or more than 1000 per day, taxable. Then renting of Kalyan Mandaps and all or premises for any other gatherings there. Sir, it need not to be Kalyan Mandaps only. It could be their premises also. Per day, if they charge less than 10,000 per day, exempted. More than or equal to 10,000, taxable. Renting of shops less than 10,000 per month, exempted. So rooms less than 1,000 per day. Premises Kalyan Mandaps less than 10,000 per day. Shops less than 10,000 per month. Then they are what? Exempted. Then services by way of training or coaching in recreational activity. What's a recreational activity? Sir, what is called recreational activities? So recreational activity na, like which can revive back your energy. So, okay, so which can change your mood and all. So it could be music, it could be dance, okay, it could be a sport. All these will come under what? Recreational activities. So related to that, what is being provided, sir? Training or coaching. Training, coaching with respect to recreational activities. And that also in which fields? Arts. It could be martial arts and all, like karate, taekwondo, those things. And it could be culture related, like classical singing, classical dance, those things. And even sports related. The training should be provided by whom? Either an individual or by a charitable entity. Then that service is exempted. In simple, training provided by individual or a charitable entity. In which fields? Arts, sports, culture related recreational activities. Then the training or coaching fee, whatever they receive, that is what? Exempted. Sir, we'll see like certain sports associations and all will in summer they'll run like cricket camps. Okay, summer cricket training camps, summer related swimming camps and all. Okay, so all those they are providing recreational activity in what? Sports. So their training and coaching is what? Exempted. Then services provided by charitable and religious trusts other than those covered above, taxable, and services provided to them are also taxable. I mean only these services provided are exempted. Any other services provided by them are like what? Taxable only. Sir, what else they can provide? Sir, they can allow their premises to keep some hoardings and all. See, there is like a charitable entity which do all these charitable things. Their services are what? Usually exempted. But it's in a prime locality. So its compound wall has been taken on rent by various ad agencies to keep their hoardings and all. So for allowing to place hoardings and all, then these charitable institutions will get rent. But that rental income is not exempted because nowhere it is mentioned. So only the incomes which are mentioned here are exempted. Others are taxable only. Then residential programs. What is this one? Sir, the spiritual institutions. Okay, the spiritual institutions. Like let's say example of Isha Foundation only. So they'll provide this spiritual classes and all. Like in Coimbatore. Okay. So it's runs like a package kind of like 21 days or 7 days or 42 days, such things, where you'll go there, you'll be stay there in their ashramam itself. So there they'll provide food, accommodation along with that spirituality classes and spirituality preachings and all. Along with that spirituality preachings, even they'll provide accommodation and food also. So now it became like what? A bundle of supply. But what is the predominant there? So you went all the way to Coimbatore for what? For food? No, for what? That spirituality, right? So that's why predominant is spirituality, which is exempted. Then the whole bundle is exempted. Okay. Then sir, we are moving on to healthcare service. Healthcare services provided in a veterinary clinic. Sir, in a veterinary clinic, the services are provided to whom? Animals and birds. So all the services provided to, healthcare services provided to animals, birds are exempted. But there are pet clinics where they not only provide this healthcare related, they provide other services like grooming of pets and all. Those services are taxable. Only health related what? Exempted. Okay. Then services provided by way of transportation of patient in ambulance. So whatever the fee charged by ambulance, exempted. Then the next one, sir. Sir, we know this 108 ambulance service. It's there like in almost all the states, I think. It's okay. For ambulance, we call 108 and the ambulance will come. It's okay. So that is like free only for us. So we are not even paying anything. That's like government run ambulance and all. But those vehicles are not owned by government. So those vehicles are owned by private people, but they'll run the vehicles on behalf of government. But they'll not get petrol, driver cost and all free, right? So what happens? How it works, you think? So those private operators will be running their ambulances on behalf of government. Government will be paying them monthly some amount. Now these ambulance operators are providing services to whom? Government. To the government. Whether such service is exempted or taxable is the question. Sir, for us, ambulance service is provided by government. No consideration at all. So it's not even supply. But government to provide that ambulance service to us, it is taking service of whom? The private ambulance service providers. Okay. So these private vehicles run and operate ambulance services to government. Government again provide ambulance to whom? Public. So the question is whether this government paying consideration to this private vehicle. So whether this is taxable or exempted. It is exempted. Why it is exempted? That also important. Since this service is taken to provide the functions entrusted to municipalities in Article 243G(W) of Constitution. Understand, sir? Where government to discharge their functions which are given in 243G and W in Constitution. I mean, sir, government will have some prime functions, okay? Like what? Maintenance of roads. Who has to take care? Government. Street lights? Government. Sewage facilities and all? Government. So the basic health of public? Government. So to discharge their functions, if they take any input service and all, like just like here, taking care of health of public is also one of the functions of government. To take care of that, they are taking ambulance service of private vehicles. So that is what that service they are taking to discharge their functions. Since the service is taken to discharge their functions, all those services are like what? Exempted. Same way, laying a road is also a function of whom? Local authorities and government. So to lay the roads, if they take any service from a contractor to lay the road and all, that service also what? Exempted. So here, this is not just for healthcare. Anything, sir. Service taken to provide functions entrusted to municipalities in Article 243G(W) of Constitution. So to discharge their functions which are mentioned under these two clauses, if they take any inward service, I mean, then government take any inward services, all those are what? Exempted. So private ambulance service, private vehicle operators, when they rent vehicles to government to run them as ambulance, that service is what? Exempted. So 3 points I covered. Veterinary clinic, normal ambulance service, and this 108 related. Then normal healthcare services provided at a clinical establishment. Sir, clinical establishment, it could be a hospital, clinic, whatever you refer. Okay. Service is provided by whom? Medical practitioner or paramedics. Who are called paramedics? Nursing staff, physiotherapists, these people. Okay. And it should be the, sir, understand, the healthcare service should be provided in which what's a recognized system of medicine. What are called as recognized system of medicines? Ayurvedic, naturopathy, allopathy, Siddha, Unani, Yoga, or any other system of medicine. Okay, you can remember like here what? Anasuya. Ayurvedic, naturopathy, allopathy, Siddha, Unani, Yoga, or any other. So only these are called recognized system of medicines. The treatment should be provided in these systems only, then only they are exempted. So what else could be there other than this? Like there could be stone therapy. Stone therapy, like what? Like they'll place stones at different parts of your body. So which creates like on the pressure points and all, they'll put these stones and all, which may provide you relief and all. Like acupuncture. So you know acupuncture, like they'll put needles and all. The same similar kind of stone therapy also. So this acupuncture, stone therapy, pranic healing. So all these are not recognized the system of medicines. Those are like what? Not exempted. Those are not exempted. But these recognized systems are what? Exempted. Then one more thing, sir. In a question there will be like palliative care. Sir, palliative care means actually it's not a treatment. But for some certain critical stage of diseases or certain critical stages, there may not be a treatment. But this palliative care just try to uplift the quality of the patient. I mean, quality of life of the patient. I mean, it may reduce the strain of patient, or it gives some relaxation from the pain he suffers. Ultimately, that only it can do. It cannot cure the disease. So palliative care also is an exempted only. It is a part of recognized system of medicines only. Palliative care. Okay. Then healthcare services like hair transplantation, cosmetic, plastic surgery. Sir, usually these are what, sir? These are not healthcare. These are like what? Cosmetic and beauty treatment. Hence they are what? Taxable only. But if at all, to reconstruct the anatomy, let's say, sir, a child is born with certain defects. Then to reconstruct his anatomy, I mean, to make him like normal, any face surgery is taken, or any this transplantations and all has been made, then that is what? Exempted. Or any accident happened, fire accident happened, in that a person got injured. So then to make him normal, if any surgeries are there, like this hair transplantations and all made, then they are what? Exempted. Okay, na? But normally, so these days, like, so many people are going for this PRP treatment for hair transplantations, okay, tooth alignments, okay, then this jawline corrections, nose corrections, all these will come under like what? Cosmetic and beauty treatment. Those are like what? Taxable only. So, okay, if it is a real health related, then only it is what? Exempted. Then clarification. In hospitals, sir, so these days the hospital rooms are also like modern super specialty hospitals and all will have the same like 5-star hotel rooms only, like they'll provide 2 beds, one for the patient and for the attendant. They'll provide a refrigerator, they'll provide a TV. Okay, all those will be there. Only washing machine, dishwasher will not be there. Gas stove, those things only will not be there. Rest all will be there. So, since these are going beyond the basic amenities, like they are being luxurious also. That's why the government thought if it is too luxurious, they want to tax it. Actually, they want to exempt the treatment related. But when something like all these facilities are providing now, it's not just for treatment, it's becoming luxurious. That's why what they said, if the renting of hospital rooms, the rent charged up to 5,000 per day, exempted only. Beyond 5,000 they are charging, means like it is luxurious only, they're gonna tax it. Okay, and however this 5,000 limit not applicable to ICU and CCU. Then like, sir, sometimes in hospitals and all, to treat a patient, sometimes they may say like, I mean, if any critical surgeries and all needed, like any transplantations has to be made, they may say like some senior doctor or an expert doctor from some other hospital or from some other place has to come, and then he will also treat it. So when a senior doctor or expert doctor came, the hospital will charge a separate fee for doing that surgery by the expert doctor. Let's say they said like the doctor will charge 4 lakhs, but hospital collected 4 lakhs, but out of the 4 lakhs, some 3 lakhs only given to the expert doctor, other 1 lakh retained by hospital only. All that 4 lakhs is still exempted only, because what? The expert doctor or the senior doctor also ultimately doing what? Treatment only. Hospital retained 1 lakh. Why it retained 1 lakh? Sir, that expert doctor comes now, all the other like helping staff, the junior doctors and the infrastructure, everything is provided by whom? Hospital only. For that we can take like that other 1 lakh. Hence the total amount is what? Exempted. Then clarification 3, sir, canteen. Sir, understand here, only in one case it is exempted. What is that one case? Canteen owned and managed by hospital. I mean, in a hospital there is a canteen. That canteen should be run by whom? Hospital. Okay. And from that canteen, food is provided to an inpatient. Inpatient means what? A patient who is admitted in the hospital. Food is provided to inpatient as per the prescriptions of doctor. Then only it is exempted. Okay. In all the other cases it is taxable. When it is exempted, sir? Canteen owned or maintained or run by hospital itself. Then from that canteen, food has been provided to an inpatient as per the prescription of doctor. Then it is what? Exempted. Then you will see in some questions, sir, preservation of stem cell. Sir, stem cell means the nerve which connects the baby and the mother. So after, like, once the delivery happens, so then the nerve which is connecting the baby and the mother is called what? Stem cell. So that stem cell will be preserved, because the medical experts believe like the stem cell has so many medical properties and all. So in future if they need stem cell, they cannot bring it. That's why people started preserving stem cells. That used to be this preservation, just like as blood banks, eye banks. How do they preserve blood and all? The same way the stem cells also will be preserved. This service used to be exempted previously, but currently this is what omitted. The same way treatment or disposal of biomedical waste. So the medical waste cannot be disposed just like as the normal waste. So see sir, some tumors or something will be removed from the human, it's like after treating them. So all those they cannot dispose just like as like the normal waste and all. Okay, that's why there are separate treatment and disposal centers. So okay, although their services are like what exempted previously sir, but currently their services are not exempted because that exemption is omitted, currently taxable. So in simple sir, which are exempted? Healthcare in a clinical establishment by a medical practitioner or paramedics in recognized system of medicines. Recognized system na Ayurvedic, naturopathy, allopathy, siddha, Unani, yoga, homeopathy. Okay, these are exempted. Then renting of rooms above 5,000 taxable. Okay, then expert doctor, senior doctor, if any fees paid na, that is exempted only. In that if any part retained by hospital, that also exempted only. Food supplied from hospital canteen, okay, to an inpatient prescribed by doctor, then it is what exempted only. Okay, then we are moving on to next one sir. Services by Ministry of Railways. When railways sale platform, sir, this one sir, if you see here, clarification on GST registration for supply of pulses and cereals made to or by agencies of government. See here, this is an agency intended to distribute free of cost or at subsidized rates. Like let's say this is like PDS, public distribution system, where they'll provide this rice, wheat, sugar, all these at ration shops. Okay, these are like, so those are like ration shops. So these ration shops are buying pulses and cereals for what? To distribute free of cost or at subsidized rates. Okay, on these pulses and cereals, they are like packaged in like some unit containers like 20 kgs, 50 kgs, like that. Okay, previously before 17th July sir, some claimed exemption on this, some paid tax at 5% on this when they are supplying to government. But from 17th July, what it is clarified, they were like exempted only. They are like exempted only. But what if some people paid taxes before 17th July? If they already paid, that remains like that only. Okay, there won't be any refund and all. Okay, but they, sir, before 17th July 2022, there are like two views. Some people thought like it is exempted and they didn't pay taxes, whereas few people thought it was like taxable and paid taxes. But on 17th July, they made a clarification like what? That is exempted only. But if you already paid taxes, then the tax is gone only. Okay. Then services by Ministry of Railways. Sir, railways when they sell platform tickets, exempted. Waiting rooms related charge. So waiting rooms related, exempted. Clock room services. What are called clock rooms, sir? To keep luggage and all, clock rooms will be there. Those are exempted. Battery operated car services. What are these battery operated car services? To transport the luggage and all. So, okay, you can see sir. So they'll be operating those battery operated cars kind of and all in the platforms and all also to take the luggage, parcels and all from the train till the outside station and all. So all those services are what? Exempted. Then one railway zone or one railway division providing services to another railway zone or another railway division, those are also exempted. Then sir, this one sir, little attention needed sir, this one, see what. Sir, Indian Railways has something called, sir, within Indian Railways there are so many companies has been created like now, like IRCTC, the other one is like IRFC. Why? Because under one system they cannot manage multiple things, because railways is not a simple thing sir, because across India they have rail network and all these stations, all these cannot be managed under one particular governing body. So what they thought, like they thought of this ticket reservation and all, they'll create one company and all these online ticket booking, cancellations, all this will be taken care by one particular entity called IRCTC. Okay, since it is created for a special purpose. What is the special purpose? Ticket booking and all. Okay, that's why it is called as a special purpose vehicle. Same way IRFC. IRFC means Indian Railway Finance Corporation. So what is the IRFC job? It will pool money from public. I mean, it issue bonds and get money from the public. With that money, it lay railway tracks. Now the railway tracks are owned by whom? IRFC or Indian Railways? IRFC. Okay, the railway tracks are owned by IRFC. Now what IRFC will do? It will rent those tracks to Indian Railways. Sir, able to understand, sir? IRFC will issue bonds and generate and get money from the public. By using that money, it will lay railway tracks. But it has to pay back to the public, right? Interest it has to pay, or after some time it need to pay back to the public. So how it can pay back? It gives these railway tracks on rent to railways. Now railways will be paying periodically rent. That with that rent, IRFC will be paying the interest to the actual like whoever purchases the bonds and all. Now the point is, sir, railway tracks is not just about laying. Every day maintenance has to be done. Sir, but IRFC doesn't have staff to maintain all these railway tracks. Again, that maintenance is carried out by whom? Indian Railways. Okay. So now Railways is providing service to whom? IRFC. Sir, understand? IRFC gives railway tracks on rent to railways. That is one service. Whereas railways provide what service to IRFC? Maintenance of the track, or if any repair works to the track, all those will be provided by railways to IRFC. So both the ways these services are like exempted. If special purpose vehicle provide to Ministry of Railways, Ministry of Railways provided to special purpose vehicle, both these are like what? Exempted. Okay. Then services by RERA. RERA means Real Estate Regulatory Authority. Sir, if you want to construct a real estate project and all, you should get approvals, permissions from this RERA. And then if you are not constructing the property as per the proper guidelines and all, then RERA will involve and levy some penalties and all on you. Okay. Now to RERA, this builders and all will be paying some approval related fees, license related fees, penalties and all. They will be paying to the RERA. And RERA will be giving the proper approvals and all. Now this service is exempted or taxable is the question. What they said? Sir, RERA is a government authority. The services provided by government authority, these are like functions entrusted under 243W of Constitution. Hence these services are what? Exempted. Then accommodation service. Accommodation provided where? Hotel, guest house, or even in a hostel. Hotel, guest house, hostel. But understand, sir, very clear. Where the value of supply is less than 20,000 per person per month. Less than 20,000 per person per month. Sir, hotels mostly more than 20,000 per month only. Guest house also maybe. But hostels and all, we can see what, sir? Less than 20,000 per month only. So the value of supply is less than 20,000 per person per month, and minimum continuous period of stay should be how many days, sir? 90 days. Then it is what? Exempted. So accommodation, even in hotel, guest house, hostel, all the three it is exempted. But minimum stay should be how many days, sir? 90 days. Sir, mostly 90 days now nobody stays in hotels and all. So they will be staying where? In hostels 90 days is possible. So 90 days they should stay. And per month the value should be how much? Less than 20,000 only. So then it is what? Exempted. Then this is like not required, sir. We already discussed like co-insurance premiums are what? Negative list. Okay. And then come to educational institutions. Sir, educational institutions will provide services to whom? Students, faculty, staff by way of conducting entrance exams for consideration. So for students, okay, education service. For faculty, what service, sir? Training, transportation, accommodation. For staff also same, training, transportation, accommodation. And the next one, to the students who want to get admission in this particular institution, they may conduct entrance exams and all. For that entrance exams also there will be some fees. So by way of conducting entrance exams for consideration, all these are also what? Exempted. All these also exempted. Then educational institutions can be classified into three types: up to higher secondary school, qualification recognized by law, and vocational education. When they are providing like up to higher secondary school now, up to 12th, okay, 10+2. Then qualification recognized by law. Qualification recognized by law, na, these are like what? Graduation and post-graduation courses. They should provide a qualification recognized by law. Sir, so usually when you are taking CMA coaching from BCCA, BCCA will not give you any certificate. Who will give? ICMAI. So the registration fee you pay, exam fee you pay is what? Exempted only. But the coaching fee you pay is not exempted. Okay? But to a degree college for graduation and all, to an MBA college if you pay, that is what again? Exempted, because they can provide recognized qualification. Okay? All these engineering colleges, BTech colleges, law colleges, medical colleges, okay, then normal degree, all those colleges, their services are like what? Exempted. Then which are not covered? Private coaching centers and all, tuition points and all, okay, their services are not exempted. Then vocational education. What is vocational education, sir? Vocational education is nothing but skill-based training. They'll have courses regarding electrical works. They will have courses related to carpentering and all. So those will come under skill-based works. They will not give any professional qualification, but still they can do work. Sir, we can see like, even in a guy who completed BTech with ECE, he's an electric engineer or electronics related engineer, but still he may not know about like repairing a major electricity like circuit, one switchboard. If he has to correction also, he cannot know, even though he has a professional qualification. But an 8th class discontinued guy who had a skill, who is practicing that electrical work and all, can do the whole wiring to the house needed. Okay, so that is what? Skill based education, which we call it as what? Vocational education. So education now here, vocational education 10+2, and after 12th the recognized qualifications and degrees which are being provided. Then service provided by private coaching centers, unrecognized institutions are taxable. Then CBSE board will conduct the 12th standard exam. CBSE board. In state syllabus, SSC boards will conduct 10th class exams. Board of Intermediate will conduct 11th and 12th exams. So those boards, actually they are not educational institutions. They are not providing any education, but they'll conduct exams. Since they are conducting exams, for the limited purpose of conducting exams and the exam fee collected, they also will be treated as educational institutions and their services also exempted. Composite supply and mixed supply we already covered yesterday. Varshita Venkatesh. Okay, then maritime training institutions and flying training centers approved. Sir, maritime training institutions and flying training centers, these are nothing but like what? Maritime training institutions and then what? Flying training centers. These are nothing but they run a regular degree, and morning evening they'll give Navy related training, Army related trainings and all, and then this pilot training and all they'll be providing when they run a regular degree, and morning evening this extra training will be there. So those are called as maritime training institutions, flying training centers. They also has the recognition of educational institutions, so their services are also exempted. Then boarding schools. What is meant by boarding schools? Or boarding school where they provide hostels also, okay, accommodation also. So there is education, accommodation plus food. Then wholly exempted. Then in schools and all, hobby classes, extracurricular activities will also be conducted. All those are naturally bundled, and then what it is? Exempted. Then IIMs. When IIMs offer long duration programs, exempt. Sir, IIMs, normal like MBA and all they provide, that is exempted only. To executive, sir, these are like executive courses. Executive courses, you'll learn these courses by doing your job only. Okay, you'll do your job. Maybe these courses are sponsored by your employer. So, okay, sir, you might have joined your company at a normal level. But once, see, the normal corporate hierarchy we know. So, you'll just join as an associate. Then you'll become like senior member. Okay, then you'll become a associate member. Then you'll become a senior member. Okay, senior engineer or someone, depending on what you are, senior analyst, associate analyst, senior analyst. Then you may become team lead. So once you are becoming a team lead, now you are becoming into an executive position because you need to lead. So to bring you that, sir, till day he might be an engineer, but once he becomes a team lead, he need not only just the engineering capabilities, he even should know what the managing things and all. Further, the corporates and all will sponsor them for executive MBAs and all. Team lead, then what? Associate manager, then manager. It's okay, those hierarchy will be the right. So once you go your position and all, you need not only require the technical skill, you need even the managerial skills also. That's why executive MBAs and all will be sponsored. If it is like a long duration programs, exempted. Short duration programs, they'll run for 30 days, 40 days and all. Those are like what? Taxable. Then educational institutions, sir. Educational institutions, sir, I'm not talking about the normal private institutions and all, because of the scarcity of jobs or because of the demand for jobs and all. These days, companies are not paying. Educational institutions only asking the companies to come and recruit people from their institution so that they can promote it and then get their admissions filled. Okay, that's the thing which is happening. But traditionally, how it is to work, even with ICA and ICMA, it works the same way. What we are being saying, like what? If any company wants to participate in the campus placement, first they have to pay some amount to the institute, then only such company can come and participate in the campus placement. Sir, why they need to pay? Because institute is giving access to so many qualified people from where they can select the human manpower whichever is needed. So educational institutions providing services to companies for allowing or giving access to the qualified people to recruit. So these services, okay, are what? Taxable. So educational institutions, when they are providing services to staff, students, faculty, exempted. Here they are providing to what? Some random people who are coming to their place to recruit people and all. So their services are what? Taxable. Understood now, sir? So educational institutions providing services to whom are exempted? Students, faculty, staff, exempted, or by way of conducting entrance exams, exempted. Educational institutions, 3 types. Then central state educational boards, their services also exempted. Maritime training and flying training institutions, exempted. Boarding schools, exempted. Hobby classes and all, exempted. Okay, then, sir, these are like little important, sir, little be cautious. Here, exemption is related to educational institutions only. I mean, linked to education, but not the exemption directly to educational institution. Sir, understand? See, understand? Sir, let's say I run a catering business. I do provide food supplies to a school. I do provide food supplies to, so like, sorry, there's a school, like a play school and all, where they even provide food also to the kids and all, because both father and mother are working. They went to office and they can come only in the evening. So all this, like the daycare, it's also there. Daycare, so play schools, all these are there. So the full day has to be taken care by whom? These people only. So for them to provide food and all, I will be doing the catering service. Okay, I am providing the catering service. Sir, I am not running an educational institution. I am running what? Catering business. And I do provide food to a corporate company also, to their staff, to provide in the lunch and all. For afternoon lunch also, for a corporate company I provide. And even when there are any functions, like any family gatherings are there, or any functions are there, I will be providing catering and all. Sir, when I provide it to a corporate company, taxable. When I provide it to a functions and all, taxable. But when I provide it to a school, exempted. It's okay. So here the reason exemption is not to educational institution, but the reason is what? Because the food is being, the catering is being provided to an educational institution. Are you able to understand, sir? Second one, I own some 10 buses. These 10 buses, 3 buses I am giving on lease to a school and running them for like picking their students and dropping their students. So okay, 3 buses I am using for a school. Then other 4 or 5 buses I'm running them as like normal, the private travels buses and all. It's okay, 8. Other 2 buses I given to an engineering college. Sir, when I give it to a college, taxable only. When I give it to this like private travels and all, taxable only. But when I give it to a school for transportation of their students, staff, faculty and all, that is what? Exempted. See, supplier provides what services, sir? Transportation of students and faculty, or catering including midday meal scheme. To whom? Recipient. Recipient is whom, sir? Educational institution up to 12th. So to these educational institutions, sir, educational institutions are of 3 categories. What are those 3? Up to 12th, above 12th, recognized qualification, vocational education. So these 2 provided to educational institution up to 12th only exempted. Understanding na, sir? Then a supplier provides services like security and cleaning. Then also that services are like what? Exempted. So the supplier is not educational institution, but the recipient is whom? Educational institution up to 12th. So exemption is not to educational institution. Exemption is to some other supplier. But the reason is recipient is being educational institution. What services, sir? Transportation of students, staff and all. Second one what? Catering, including catering under midday meal scheme, and security and cleaning. All these services are like what? Exempted. Then next one, sir. Any person providing services related to conduction of exams to an educational institution, any type of educational institution, what service is provided, sir? Related to conduction of exams. Now tell me, related to conduction of exams, what are the services? Invigilation will be there. Then, so look after our exams only, our CMA exams only. First, preparation of question paper, fine. Question paper prepared. Then how do we get that question paper? Printing service, question paper printing. Then first, sir, all the exam halls which we are using are owned by institute. Those are like some other colleges which were taken on rent, or they are paying like daily charges and all. So that rental charges, invigilator charges, then evaluation charges, all these are like what? Related to conduction of exams. So all those are what? Exempted. So, okay. To what? To any type of educational institution up to 12th, above 12th, or to vocational institutions, to all of them, if the service is related to conduction of exams. Sir, what are covered, sir? Question paper preparation, printing of question paper, then like taking the centers, exam centers for rent, invigilators any paid, or for examiners if any paid, and for evaluators if any amount is paid, all those will come under conduction of exams only. All their services are what? Exempted. Then the last ones are here. Any person providing services to an educational institution, what? Online periodicals and journals. First, periodicals and journals means this kind of, so you know these kind of what? Magazines and all. Okay, which comes like monthly magazines, weekly magazines and all. Okay, so these kind of periodicals or journals means this. But these were not taken in like physical form. Taken in which form? Online. So, okay, sir, we know these days like even e-newspaper also we can take. So, okay, same way, instead of the physical, this periodicals and all, PDF copy will be provided. Understood, sir? So, any person providing service of what? These online periodicals and journals. That also to whom? Educational institutions which provide qualification recognized by law. Not who are not covered. Up to 12th educational institutions not covered. Vocational institutions also not covered. When the service is given to these people, then only they are exempted. Okay. So understood now, sir? Okay. Then electricity. Transmission and distribution of electricity is what? Exempted. And then if any application fee for connection, rental charges, testing charges, labor charges for shifting meters, charges for duplicate bill, all these are also related to what, sir? Transmission, distribution of electricity. So the main service is what? Electricity supply. The incidentals are like what? Application fee, rental charges for meter and all, shifting meters and all, duplicate fee, bill related, all these are like bundled, incidental to that of main supply. Since the main supply is exempted, these incidentals are also exempted. Then legal services, where arbitral tribunal, senior advocate, or firm of advocates. Sir, arbitral tribunal means what? Sir, arbitral tribunal will provide, like they'll arbitrate on behalf of a client. They'll arbitrate, nothing but there is a dispute between two parties. This arbitral tribunal, sir, me and some other person X having some issue regarding a business. Now, instead of going to court, we thought of settle this through arbitration. So I will appoint an arbitral tribunal, nothing but he is also like a lawyer kind of. He'll talk on behalf of me. X also will hire some other arbitral tribunal. Now we both talk now, then it will be fight only. So instead of we both talking, on behalf of me, my arbitrator will go, on behalf of X, his arbitrator will come. So both objective is what? My arbitrator will try to get maximum benefit to me. His arbitrator will try to get maximum benefit to him. So they'll come at a common point where the issue gets settled. So why he'll come and go and talk on behalf of me, sir? Because I'll pay fees to him. That is the service he's going to provide. Arbitral tribunal. Then senior advocate, firm of advocate. Sir, in advocates, like senior advocate is there, advocate is also there. Who will be called as senior advocate? Depending on their winning ratio, they'll become senior advocate. Okay, so arbitral tribunal, senior advocate, firm of advocate, advocate, when they are providing services to any person other than business entity. Okay, so let's say, sir, one guy has a divorce issue. Okay, then to represent the divorce issue, a lawyer represented him. Then what? Personal or business related? Personal. So it is not like a business entity related. So what? Exempted. Okay, then even it is related to business entity, but the business entity turnover is within the registration limits. Registration, sir, 22 is about registration limit. What are the registration limits? It depends, sir, but general limit, sir, for goods 40 lakhs, services 20 lakhs, both also 20 lakhs. But it depends on state to state, sir. I said like general one. Goods 40, service 20, both na 20 lakhs. Okay. So when business entity aggregate turnover is within those limits, I mean, it's a business entity, but not required to register. So for such business entity, if they provide service, then also they are like what? Exempted. Or the service is provided to government, then also their services are exempted. Sir, understand? Legal services provided. Who provided to whom? Arbitral tribunal, senior advocate, firm of advocate, advocate. Providing services to whom? Any person other than business entity. Business entity turnover less than the registration threshold limits or government. Then the services are what? Exempted. Then whereas senior advocate, sir, understand? Whereas senior advocate providing services to firm of advocate, then those services are what? Taxable. If the aggregate turnover in preceding financial year, sir, it may not be there in your books and all, correct it. Senior advocate providing services to firm of advocate, it is taxable. When it is taxable? When the firm of advocate or advocate turnover is more than 22 subsection 1 threshold. Sir, it's like what? Advocate providing to another advocate. Whereas senior advocate providing services to firm of advocate or an advocate where his aggregate turnover in preceding financial year is more than the threshold limit. More than threshold limit. Then it is what? Taxable. But understand, sir, here. Where firm of advocate or advocate provides services to senior advocate, then exempted only. Sir, you should understand here. One firm of advocates provided to another firm of advocates, exempted. A normal advocate provides to firm of advocate, exempted only. All this firm of advocate or advocate provides to senior advocate, then also exempted. Then it is taxable. When a senior advocate provides to firm of advocate or advocate. Sir, why senior advocate? Sir, understand? A case come to a normal firm. It's okay. So they are like trying to solve the issues and all, but the case became complex at a point of time. The case became so complex and they want to win the case. And these lawyers, this firm of lawyers thought like, we cannot take it from here because the case is becoming complicated. If at all a senior lawyer involves, then he can tackle that much more better way. So this firm of advocate, what? It has hired another senior advocate. Now senior advocate is providing services to firm of advocate. Then those services are like what? Taxable. Understanding, na, sir? Okay. Then renting services. Renting of residential dwelling. Where a residential dwelling, sir, residential dwelling, residential building and all, given on rent to an unregistered person, exempted. To a registered person being an individual, sir, understand, I am a registered person, I took a residential building on rent. But residential building, I may use it as my office also. If I use it as office, taxable. But if I use it as residence only, exempted. Sir, this exemption available only to individual. Registered person being individual If it is used as residence for him or family, then it is what? Exempted. Then services provided by unincorporated bodies or non-profit entities. Services provided by unincorporated bodies or non-profit entities. Sir, understand? Wherein what are called unincorporated bodies or non-profit entities, like associations and all. Okay. So see, there is an association or a non-profit entity providing services to members. Okay. Sir, understand? Okay, let me explain you the issue here. Sir, let's say, sir, there are like a group of farmers who lost their land because of a irrigation project there. So there is an irrigation project being constructed. So to construct this project, a group of farmers' land has been taken away by the government. So okay, fine, for project construction they given. But the compensation fixed for them is not satisfying to them. Let's say the government fixed the compensation as like 10 lakhs per acre. But they are saying like market value is like 40 lakhs. Government is paying how much? 10 lakhs only. So that's why this group of farmers, how many are there? There are some 200 farmers here. So these people want to file a case to get higher compensation. So these 200 farmers, what they did, sir? They went to court. So these 200 farmers, they formed as a association. Sir, understanding, sir? Otherwise, every time all these 200 people cannot go to court. So that's why they formed as like what? Association. Now this association, like as a group they formed, there are 3-4 people who are representing all the 200 farmers. And now this association has hired a lawyer, and lawyer is representing this particular issue. Lawyer will do freely, yeah? He has to get fees, right? Now how they'll pay the fees? How the association will get money? From members only they'll pool money. Now see, sir, association is providing service to members. What? Association is providing that legal service and all for the benefit of whom? Members. Now for that, members are doing what? They are reimbursing the charges or giving their share of expense. Then this service is what? Exempted. Then this service is what? Exempted. Okay. Then residential housing societies or residential welfare associations. Sir, in all the gated communities, these things will happen. What? For these apartments and all, there will be an association. Now this association will collect every month maintenance charges or membership charges every month. Why they will collect? With the charges collected, association will provide power backup, water supply. If any water is not available, they'll bring tankers and all, that water supply. If any lift and all is there, that lift maintenance, common area cleaning, security. Okay, if any pool is there, so okay, that pool maintenance, temple is there, the temple maintenance, gyms and all also will be there, depending on the size of communities and all. So all these will be taken care by whom, sir? Associations. Understanding na, sir? So now, where a housing society, residential welfare association providing services to members. What services? Related to water, electricity, lift, gym, pool, security, cleaning. And members are paying what? Membership fee or maintenance charges. Then the, understand na, sir? And the amount paid is what? Less than 7,500 per person. It is what? Exempted. And make a correction, sir, here. Make a correction here, sir. If the amount is like less than or 7,500 per person, it is what? Exempted. If it is in excess of 7,500, then the entire amount is taxable. If it is up to 7,500, it is what? Exempted. If it is above 7,500, then the entire amount is taxable. Housing society, residential. Sir, you live in an apartment. Every month, the apartment association is asking you to pay 3,000. Why 3,000? To provide the common area clean, okay, lift services, the security, all those for that 3,000. Less than 7,500 only na, exempted. If they ask you to pay 10,000, which is more than 7,500, sir, I am not talking about rent, I am talking about maintenance only. That is more than 7,500, then it is what? Fully taxable. Then the last one, sir, this one also see. There is an association or non-profit entity, which provides services to members like activities relating to welfare of farmers, labor, promoting trade, commerce, art, literature, sport, etc. Sir, the first one and this third one looks like same. But the difference is like, sir, understand, I pay membership fee to the ICMAI. or to ICMAI. Once you qualify, you also pay membership fee to the institute. But by paying membership fee, are you getting any direct benefit? Just to be a member, you are paying. Or else like you joined in a student association. Like ABVP, SFI, these things are there like student associations. You paid some 100 rupees and you became a member in that association. Will you get any direct benefit? No. So just to be a member, you are paying. So those is like what? Providing services for the overall welfare of the community. They'll not give any one particular direct benefit to you. They'll try to give benefit what? For the overall benefit. Like let's say, sir, you joined in like what? AP CMAs Association or like Telangana CMAs Association. You joined and you are paying every year 2000 as membership fee. They'll not give any direct benefit to you. But what benefit they can do for the overall that particular area CMAs they'll do. Like what? If something new changes and all comes now, they may conduct seminars, webinars and all. So you can go and attend. So that knowledge gaining you will have. Okay. So when any particular member is facing an issue, then the whole association will try and help him. So those kind of services are there, but not direct benefit to you. So for that, if the membership fee paid is like less than 1000, exempted. Above 1000, then the total amount is taxable. Sir, here what happening? There is a direct benefit to member. For that benefit is paying what? Reimbursement of charges or share of expenses. Then it is what? Exempted. Here no direct benefit for the overall community benefit. Okay. That also the membership fee paid is what? Less than 1000, exempted. Understood, na sir? Then agriculture related services. Service of loading, unloading, packing, storage, warehousing of rice, agri produce, all these are what? Exempted. Then warehousing of minor forest produce. Sir, service by way of what? Loading, unloading, packing, storage and warehousing of rice and agri produce. All these services are what? Exempted. Sir, understand once again. Loading, unloading, packing, storage, warehousing of what? Rice, agri produce. Sir, rice is not agri produce actually. Paddy is agri produce. But still they included what? Rice. So okay, rice if you store, load, unload, packing, storage, all these are what? Exempted. Same way, agri produce also exempted. Then if you warehouse minor forest produce. What is, sir, warehousing of rice? Exempted or not? Exempted. Warehousing of agri produce? Exempted. Warehousing of minor forest produce. Minor forest produce na, the produce which comes from forest and all, like honey, spices, etc. All these also what? Exempted. In question they may give like warehousing of sugar. Is there a, sir? Sugar cane is agri produce, sir. Sugar is not agri produce. So warehousing of sugar what? Taxable only. Warehousing of wheat flour. Taxable only, sir. Wheat flour. Because wheat is not a, sir, wheat is agri produce. Wheat flour is not agri produce. Understand, sir? Then artificial insemination of livestock. Sir, artificial insemination is nothing but breeding of livestock. That is what? Exempted. But exemption is not available to horses. Then any services related to cultivation. So you are a farmer, you do cultivation. For you, if any farm labor is supplied. So there is a person who supplies farm labor. His service is what? Exempted. He rents agri machinery. Exempted. He provide agri extension services. What are agri extension services, sir? Seed testing, soil testing, and guiding the farmer in like what crop has to be taken or what fertilizer has to be used, what pesticide has to be used. So all those will come under what? Agri extension services. All these services are what? Exempted. Then services of preconditioning, pre-cooling. Sir, apples and all, to store for a longer time, to preserve for a longer time, they'll be kept in cold storages and all. Okay, that comes under pre-cooling. And even on apple they do waxing also. It's okay, that shine and all will come. That's called what? Waxing. Then ripening centers. So mangoes or bananas these days are ripened through the ripening centers. So those ripening centers, labeling, retail packing, all these services are what? Exempted. So look at once again, sir. First one is what? Services by way of loading, unloading, packing, storage or warehouse of rice, agri produce. Next one, warehousing of minor forest produce like what? Honey, spices, etc. Then artificial insemination of livestock. Then services related to cultivation of farm labor, renting of agri machinery, agri extension services. Then services like what? Preconditioning, pre-cooling, waxing, labeling, retail packing. All these services are exempted. Then processing of agri produce. When any agri produce is being processed, sir, let's say corn. If you take corn, then the corn has been like they pluck the seeds separately. So then that process will not change any essential characteristics and all. That process is what? Exempted. Then paddy. When they cut the paddy and from the crop, when they are separating the seeds alone, that process also not changing any agricultural, not changing any essentials. Or from groundnut, when they break the total nut and from that they are removing the nut separately, that also not changing any essential characteristics. Then those processes are still related to agriculture only. They are like what? Exempted. But you do convert tomatoes into tomato ketchup, potatoes into potato chips. So though there is actually converting into a different form and all. So those processes are like what? Taxable. But if it does not change essential characteristics, then they are like what? Exempted. Then there are agricultural market yards. Sir, most of the farmers, when they get produce, how do they sell? They'll take them to the market. It's okay. How market? Like directly they'll sell it to customer. Huh? So they can find directly the customer. Huh? No, sir. There will be these agents and all, or commission agents and all. What they will do? They will be running their shops, commission shops and all. There, this farmer will go and keep his stock there. Then that commission agent will call all the vendors. No, vendors will come and they'll buy the goods. Are you able to understand, sir? Okay, the probable people who want to buy the goods, he'll call for them and they will come, they look at those goods and then they will be buying. Sir, why this agent has to do all that? He'll get commission. So that commission is what? Exempted. Sale of agri produce on commission basis is what? Exempted. Then clarification, sir. First one, renting of vacant land for cattle grazing dairy farms. Renting of vacant land for what? Cattle grazing. Sir, cattle grazing means what? Sir, we have, the same point came in the yesterday's class also in a question. What? Vacant land given for stud farm, taxable. But for cattle grazing or for dairy farms, exempted. Except for horses. That means for stud farms, taxable. Other than stud farms, exempted. Then, sir, understand here, this process change the essential characteristics. That's why all these processes are taxable. Sir, green tea leaves. Sir, tea leaves looks like this. Okay. But tea powder looks like this. No, right. So what they do? They do drying, rolling, shaping, oxidation. Let's say, sir, like our Manjunath owns some 1,000 acres of tea estate. Okay. So he has his own tea leaves and all. But from that tea leaves, he only wants to create his, sir, are you gonna make a marathon for inter? The marathon released for December 2025 is still relevant for you guys. It's okay. I'll come up with an amendment video so you can proceed with the December 2025 part. Okay. Sir, green tea leaves, he owns 1,000 acres of tea estate, right? He want to sell the tea powder on his own brand. But he could not develop a factory, no. He could not construct a tea, all that machineries and all he cannot buy. So what he did, he tied up with some particular processing person. So then what he did, he'll give tea leaves to him. Then they'll convert it into tea powder and give it to him. So now the tea powder he can market and sell. Okay. Now understand the point is, these green tea leaves, they are doing what? Drying, rolling, shaping, oxidation, and was converted into green tea or black tea. This process of conversion is what? Taxable. For that processing alone, that job alone, they are charging fees. Something like rice mill, sir. You'll take paddy. They'll convert paddy into rice. For that conversion, for bag, let's say they are taking 100 rupees, 200 rupees. That charges we are talking about. Okay. Same way here also, he'll take tea leaves. They'll convert it into tea powder and give. For that conversion, whatever the charges they collect that are taxable. Then you took sugar cane. they convert into jaggery and give. That conversion charges also taxable. You took pulses, black grams, green grams, all those. Okay, then they remove the husk or they split them. So that de-husking, splitting process and all also taxable. Paddy milled into rice, this process also taxable. Sir, understood, sir, everybody? Okay, then construction service. Sir, what is happening here? This is a road. It's okay, you may not understand my creativity and all here. So this is a road going on, and beside this is like an electric lane going. Okay, there's a grid kind of, okay, electric lane going on. Okay, here there is a farmland of farmer. In this farmland he has a tube well, nothing but like a bore well and all. Okay, so here there is what? There is an electric lane. Here there is a tube well of farmer. Now for this bore well, electricity is needed. Okay, now farmer is asking this electricity distribution companies. What are electricity distribution companies? Like in AP na, AP distribution companies, AP Discom, Telangana Discom. Okay, distribution companies. Okay, they are the ones actually who will provide the electricity connections to us. So this farmer went and requested them. Okay, but they said like what? So this is like almost some 3 kilometers distance is there. For laying an electric line for 3 kilometers, they said like it's not viable for us. For one particular connection or for 3 or 4 connections, we cannot lay 3 kilometers of electricity lane. Then what the farmer said? He said like, I will only pay the construction cost and all. Now what? Farmer is paying that construction cost to lay the electric lane. Now electricity distribution companies, what they are doing? They are providing the service of construction of electric lane. So in this case, that construction service is exempted from GST. Okay, then so these are like government constructed houses, sir. Okay, these are like what? The government constructed houses like. So now government is constructing housing complexes under PMAY scheme. PMAY na Pradhan Mantri Awas Yojana or Housing for All mission. So under this scheme, if any construction is going on, repair going on, alteration going on, modification going on. So the contractor is doing what? Construction, repair, alteration, modification. Sir, wait. Construction service is not exempted. This contractor service is taxable only. But to provide this, if contractor takes any pure labor supply, sir, okay, sir, I have some, I mean, under my supervision, there are like some 500 laborers. So I'll be sending these laborers, whoever want work today. Okay. So let's say there's a contractor, he need 200 people today. So I'll send him 200 people. There is another contractor who need another 300 people. I'll be sending. So I'll be a manpower supplier. Okay. So my service is exempted. So you are a contractor, you construct buildings under PMAY scheme or you repair under PMAY scheme. Your service is not exempted. But to you, for a contractor who constructs under Pradhan Mantri Awas Yojana scheme, I am supplying pure labor supply. That labor supply service is exempted, not the construction service are here. Are you able to understand, sir? So, okay, the contractor do the construction service. That is not exempted. But for this contractor, pure labor contract service is provided, which is exempted. Same way, a single residential unit, I mean an individual house is being constructed. For that also, construction service is not exempted. But to that construction contractor, pure labor supply service is provided. That pure labor supply service is exempted. Understand, sir? Construction is being going on under which scheme? PMAY scheme or Housing for All mission. Under that scheme, if construction is being happening, and then a person supplies pure labor contract, pure labor supply, that pure labor supply is exempted. Then there is a construction service of single residential unit is going on. For that, a pure labor supply is provided. That is also what? Exempted. Then we are into next one, sir. Transportation services. Transportation of passengers, goods. Okay. Hello. Sir, voice is clear only, right? Sir, or is there any issues with the audio? Hello. Sir, where a transportation of passengers and goods, both we are discussing together, sir. Passenger, goods. First we are talking about what? Airways. Through airways, where there is any so through airways there is a passenger transportation service is going on. Okay, sir, through airways if goods are being transported, then that is what? Taxable. Through airways if goods are being transported, that is what? Taxable. Then if through airways if passenger transportation is made, then the exemption available only when the aircraft is embarking na flying, okay, terminating, landing. Okay, so when it flies or lands from Assam, Sikkim, Tripura, Arunachal Pradesh, Manipur, Mizoram, Meghalaya, Nagaland and Bagdogra, which is located in West Bengal. Sir, from these places if it is embarking or terminating, then only it is exempted. Airways and the passengers are from where it is embarking, sir? Embarking or terminating from Assam, Sikkim, Tripura, Arunachal Pradesh, Manipur, Mizoram, Meghalaya, Nagaland. So these are like the northeastern Himalayan belt. Okay, then Bagdogra, which is located in West Bengal. From these places if the aircraft embarks or terminates, and that too in economy class, not business class, economy class, then those services are exempted. Why na? Sir, to improve air traffic from these places, the government has given a exemption here. And if it is goods transportation, na, taxable only. So airways done. Then waterways. Sir, if it is like inland waterways and even includes inland coastal waterways. Inland coastal waterways. Sir, what is inland waterways, inland coastal waterways? Within the country, from one place to another place, within the country only if the transportation is used. I mean by using rivers and canals. That's inland waterways. When it goes from like Chennai to like Vizag. So both are like what? Coastal areas. By using the sea route, okay, it was went from Chennai to Vishakhapatnam. So then it comes under what? Inland coastal waterways. Okay, so or else like Mumbai to Mangalore, so okay, this side, so okay, all those will come under what? Inland coastal waterways. If they are not for tourism, exempted. Even passenger related also what? Inland waterways are like exempted. Okay, so these waterways related, inland waterways, either for transportation of goods, passengers, both are like what? Exempted. But understand, sir, passenger transportation, if it is like tourism, taxable. Normal passenger transportation only na exempted. Okay, then railways. In railways, sir, non-AC class exempted. Metro monorail exempted. Sir, railways, what is exempted, sir? Metro monorail exempted, and then non-AC class exempted. For what? Transportation of passengers. For transportation of goods, taxable only always. But few exceptions are there. What? Relief materials. Sir, what are called relief materials? If any floods happen or an earthquake happen, then the people might be suffering. So for them to provide relief and all, vegetables, this food grains, the cloths needed, the basic amenities which they needed, medicines, all those will be sent to those people. Those are called as what? Relief materials. So when those relief materials are being transported, exempted. When those relief materials are being transported, exempted. Or the goods being transported are Onam. So Onam means, sir, here I wrote, Onam means, oh, for organic manure, N for newspapers, A for agri produce, M for military equipment, and another M for milk, salt, edible oil. So these are being transported. One is relief material and then Onam. Onam means what, sir? Organic manure, newspapers, agri produce, milk, military equipment, milk, salt, edible oil. So these are being transported, exempted. Then roadways. Sir, be clear, sir, roadways. Through roadways, the transportation of passengers is through non-AC contract carriage. Non-AC contract carriage. Sir, you are traveling, you hired an auto and going from one place to another. Autos, AC or non-AC? Exempted. Okay. So, if any car has been taken, that is a non-AC car, exempted. AC car, na, taxable. But understand one thing, sir. This was a rule framed in 2012. Okay, not even 2012, somewhere in 2008-9, under service tax. The same thing still copied as like that only, sir, even in GST. But these days, we should understand what? There are no non-AC cars we can see. But still the rule continues like that only. If it is a non-AC contract carriage. Sir, contract carriage means you are taking a contract with him like to take you from one place to another place. Then that comes under contract carriage. Stage carriage, na, it will go on a fixed route like RTC buses and all. RTC bus, even if you ask, it will not come to your home. It will drop at only fixed locations. Contract carriage, na, they'll come to till your, like auto, sir, it can come till your place also. So non-AC contract carriages other than radio taxi, exempted. Stage carriages like RTC bus and all, like they also non-AC, exempted. And that also should be other than for tourism. Then metered cabs. So you can see in movies and all, like Mumbai especially, for cabs, black color cabs and all, there will be this meters and all. So we see here like in Hyderabad and all, like for Hyderabad, Vijayawada, for autos there will be meters. So those metered cabs, autos, okay, if it is like public transport, those are what? Exempted. But one more thing, sir, if all these, even though exempted, when they are provided through eco, so normally if you take an auto, if you take an auto and go to another place, he asks 300, that 300 is exempted only. But you book the same auto through Rapido, taxable. So, okay, if these services are provided through eco, then they are what? Taxable. Understanding, na, sir? So, non-AC contract carriage. Okay, non-AC, na, like autos and all only will be there. Stage carriage, na, like it goes like stop to stop. Those are called as like stage carriages. Then metered cabs, autos, public transport, all these are what? Exempted. Then for transportation of goods. The transportation of goods, if it is other than through GTA or courier service, exempted. GTA means what? Goods Transport Agency or courier service, then they are what? Exempted. Through GTA also exemption available. When they are relief materials or Onam, then they are also exempted. Then tour operator services. Sir, what is tour operator service? Tour wholly outside India. Sir, understand? Tour wholly outside India and tourist is foreigner, then exempted. Sir, I am a tour operator, sir. I provide, like I'll show different locations and all to, I'll arrange a tour to the tourists who are coming. So the tourists are like from Russia. So 5 people coming from Russia for a tour. And the tour is in Sri Lanka, not in India. So where the tours are? Outside India. Tourists outside India. Only me, the service provider, is in India. So just because I'm here, it won't be taxable. So wholly outside India, tourist also foreigner, then it is what? Exempted. Next one, sir. So again, I'm the tour operator. Again, 5 people from Russia coming. But this time, they're gonna visit Sri Lanka, India, as well as China. Few days in Sri Lanka, few days in India, and few days in China. Then partly in India, partly outside India. So to the extent of outside India, it is exempted. To the extent of India, it is what? Taxable. So how much is the exemption? See. Okay, 50% of total consideration or proportionate to number of days spent outside India, whichever is lower, exempted. Look at this example, sir. The tour package is for 20 lakhs. How many days? 18 days. Tour package is for 20 lakhs. Number of days is how many? 18. So see, the tour is like 3 days in Malaysia, 4 days in Vietnam, 5 days in Sri Lanka, and 6 days in India. So what are the two conditions? First, 50% of total consideration. 20 lakhs into 50% not 10 lakhs. Then proportionate to outside India. Proportionate to outside India, how many days? 3 plus 4, 7, 7 plus 5, 12. So 12 by 18 into 20 lakhs. How much? 13.3310. Which is lower? 10 lakhs. So 10 lakhs is exempted. Then, sir, this is newly introduced, sir. Insurance service, amended provision. Insurance, if it is like life insurance, exempted. Sir, okay, not this one, sir. This part is the amended one. First you see the here. Life insurance are exempted only if they are like notified life insurances previously. But now all the life insurances are like exempted. Then general insurance. General insurance means you take vehicle insurance, you take stock insurance, you take property insurance. All those will come under general insurance. General insurance, no exemption, sir. Life insurance only exemption. So general insurance, when it is exempted, when it is taken for crop insurance, hut insurance. So not for a building and all. Hut. For hut if insurance taken, then that insurance is what? Exempted. Or for cattle, if an insurance is taken, these are what? Exempted. Now this is what the amended ones are. See, insurance company provide what? Insurance services. Which type of insurance? Either it could be life insurance, health insurance service. Okay, to whom? Insured. Hello. Sir, insurance company, when they provide life health insurance to whom? An insured being an individual, to individual life insurance health insurance is provided, or to an individual and his family, then it is what? Exempted. But where employer is paying health insurance premium on behalf of employees, where employer is paying life insurance premium on behalf of employees. Then what? Insurance company is not providing service to a particular individual. It is providing to a company or to an employer for a group. Then such cases it is not exempted. Sir, when we take personally life insurance or health insurance, those services are exempted. When an employer takes life insurance for the life of all the employees, for the health insurance of overall employees, then he is paying the premium for group, not for each and every individual. Then not a employee group. If it is an employee group, then exemption is not available. Understand, sir? So when it is taken for individually for every person, personally related, then what? Exempted. When an employer takes for the benefit of all the employees as a group, life insurance or health insurance, then they are not exempted. Then even reinsurance of this life and health insurance service is also exempted. Since their main insurance is exempted, reinsurance of life and health is also exempted. Then notified bodies like Employee State Insurance Corporation, Employee Provident Fund Organization or NPS Trust, when they are providing services to members, then their services are exempted. Then news services. News services na, when an independent journalist, Press Trust of India or United News of India, when these people providing services, then their services also exempted. Then clarification on preferential location charges. Sir, here there is C and this is like an apartment. So everybody wants like this top floors only, because from there the sea view will be good. Okay, but they cannot give the top floors only to everybody. Okay, that's why what they do, they'll put extra charges if they want a place where there will be better sea view and all. That's called what? Preferential location charges. Okay, so if any preferential location charges are there, those forms part of composite supply of construction service, and even these preferential location charges are also taxable at the rate at which the construction service is taxed. Then clarification on ancillary services provided by GTA. So GTA normally do what? Goods transportation. Extra what they are providing? They are providing loading, unloading, packing and even temporary warehousing services also providing along with GTA services. When they provide loading, unloading, packing and temporary warehousing, this kind of ancillary services, then they are like what? Composite supply with the GTA. Okay. So the question is, normal GTA service is like 5% or 18%, it is taxable. So previously it used to be 5 and 12. Now no 12%, sir, 5 or 18. So GTA has 5 or 18%. Now we don't have issue with GTA, but along with GTA, these people these days, the goods transport agencies extra providing what? Loading, unloading, packing, temporary warehousing, these services also. Now whether these has to be taxed at a separate rate or at the GTA rate only is the question. Okay, so now what is the clarity here? If they were billed separately, I mean GTA charges billed separately and these charges billed separately, then tax them separately. If they were included in the same invoice, then what? Treat them as composite supply. Main thing is what? GTA. So all these are also taxable at the GTA rate only. Okay, then this one, sir, there is a foreign airline company. There is a foreign airline company like Emirates. They have a branch here. Like they have a particular establishment here. Let's say in Shamshabad, Hyderabad airport. Emirates also has their one establishment and all. Now, when Emirate flight came to Hyderabad, it has a technical issue. So now it was kept at their particular place. Now a team from Dubai came to India to repair or to sort out that particular technical issue. Now see, import of service. Why import of service? The service people came from outside India and provided. So it's an import of service. And that too from related person only. Because from their head office only people came from their related person, and which is another establishment. Then the services are what? Exempted. Then GST on film distribution, sir. Sir, producer, distributor, exhibitor. These three are there. So okay, if you are following Telugu news, na, more prominent, because this issue is only going on in Telugu now. Okay, so there is a producer, distributor, exhibitor. Now what? Producer will sell the film to distributor. Now again distributor sells the film like area wise to exhibitors. Now distributor, when he give the right to exhibit the film to exhibitor, that right related charges are leviable to GST at a rate of 18%. Then service by way of giving vehicles on hire. So there is a supplier who gives vehicle on hire to state transport undertaking, like to RTC. Sir, you purchased 5 buses and 5 buses you are giving on rent to RTC, Road Transport Corporation. Then that rental service is what? Exempted only. Okay, provided the vehicle capacity should be what? Greater than or equal to 13 passengers. Then supplier gives vehicle for rent or vehicle for what? Transportation of students to an educational institution up to 12th. So this we already covered. Where under educational institutions only, where a person rents a vehicle for transportation of students to an educational institution up to 12, exempted. When he rents an EV vehicle to a local authority, exempted. When a person rents a vehicle to GTA, sir, you are not renting to someone else, you are renting it to another goods transport agency, then that also what? Goods transport vehicle, that is also what? Exempted. Then government services, sir. When government providing, government means whom? Central government, state government, union territory, local authority, when they are providing services to a recipient other than business entity, then their services are what? Exempted. Except postal services, transportation services, services to aircrafts, vessels in port, outside port premises. Okay, these three we call it as like TAP. What are those, sir? Postal, first one transportation related, second one aircraft and vessel related, third one postal services, we are calling them as what? TAP. Except these three, any other service provided by government to other than business entity. Sir, you guys are business entities other than business entities, sir. Other than business entities. For you, if government provide any services except these three, like what? Except transportation, postal service and these aircrafts and vessels related, other than this, if any service provided to you by government, those services are what? Exempted. Then again, government providing services to a business entity whose turnover is within the threshold, whose turnover is within the threshold. So when they provide a service to any person whose turnover is within the threshold, okay, then their services also what? Exempted. Other than TAP. TAP means transportation, aircraft and vessels, postal related, and even renting of immovable property also. Except these four, any other services provided to a business entity whose turnover is within threshold in preceding financial year, they also exempted. Then government providing services to government. One government providing services to another government, those services also exempted except TAP. Then government providing services to any person. He could be business entity also, registered also, but the consideration for such service is within 5,000, then also exempted. First what we said, other than business entity, exempted. Second what we said, business entity also, if their turnover is within threshold, exempted. Government to another government, exempted. Now we are saying government to any person, exempted, provided the consideration should be within 5,000. Then Department of Posts, post offices and all, providing services to any person, that also exempted, sir. What? Not any kind of postal service is exempted. Speed post taxable, parcel post taxable, but if it is like postcard, like the brown color card will be the red, sir, postcard, that postcard related, inland letter, book post, these three services from post office are exempted. Rest all taxable. Then where government is acting as a guarantor to PSU, public sector companies, sir. A public sector company wants loan. A public sector undertaking, government undertaking wants a loan. Now, to get a loan, government is acting as a guarantee. So for that acting as guarantee, it gets what? Guarantee commission. That guarantee commission is what? Exempted. Then government issues license to telecom companies, 2G spectrum, 3G spectrum, 4G spectrum and all. So where then government is giving license to telecom operators, that service is also what? Exempted. Then government, central government, state government, union territory, local authority provide these kind of services to any person. What? Registration, testing, issue of passport, visa, licenses, and in the form of fines, penalties for tolerating an act, non-performance of a contract, and giving the right to use of land. All these services also exempted. Then state government, sir, actually when a mine is allocated, state government will collect royalty. So because all these natural resources are obviously owned by government. Now a mining company want to do mining, then once it mines something, once it gets that mine and all, it has to pay royalty to the state government. But state governments will give that license to someone else. I mean that mining, that royalty collection license to someone else, and they'll take lump sum amount. Giving that license is also what? Exempted. Okay. Then state government, central government, union territory, 12A, 12AB entities. Sir, understand, these central government, state government, union territory or even charitable entities, when they are running a old age home, running what? Old age home. And in the old age home, the consideration is like less than 25,000 per month, then that service is what? Exempted. Then that service is what? Exempted. Okay. Then services to sports body, where a player or a referee or umpire or a coach or team manager. Sir, who are, sir? Player, referee, umpire, coach, team manager. Player, referee, umpire, coach, team manager. So these people providing services to a recognized sports body or recognized sporting event for participating in a sporting event, then their services are exempted. So okay, he is like player, referee, coach. Their services are exempted. Whose services are not exempted? Selectors, commentators, curators. Curator means who prepare the ground. Then technical experts like cameraman and all. So okay, their services are what? Taxable. Okay. Then business facilitator and business correspondent. Actually, sir, the services of these people are like RCM. But see here, where a business facilitator or correspondent providing services to banks, insurance companies with respect to an account in rural area. They are providing services with respect to what? Accounts in rural area. Then what? Exempted. With respect to urban area, RCM. Then services by RBI, sale or purchase of foreign currency among banks, all these services also exempted. Then a supplier transfers his business to recipient by way of going concern. By way of going concern. A supplier transfers his business to recipient by way of going concern. That transfer is also what? Exempted. Sir, let's say I own a professional practice. I have some clients and all. But now I gives that firm to someone else. Like I given that client base and all to someone else to continue that one in the going concern basis. Now further, he is paying me a goodwill or consideration of some 10 lakhs. That amount is what? Exempted from GST. Service of libraries. Sir, libraries, what they will do? They will give membership fee, and then they will lend the books. That part is what? Exempted. Provided by GSTN to government, central government and state government. GSTN means what, sir? Goods and Service Tax Network. What services it give to central and state government? It distributes the revenue to central and states in time, and it provides the tech functions and all this software, hardware maintenance with respect to implementation of GST will be taken care by GSTN. For that, GSTN will take some consideration from the government. That service is what? Exempted. Then services by ration shops, fair price shops to government. Okay, exempted. Services by foreign diplomatic missions. Foreign diplomatic missions na embassies. Sir, embassies and all. Sir, usually you want to go to US or UK or somewhere outside India. Then your visa gets processed where? In this embassies only. So the services by way foreign diplomatic mission are like what? Exempted. Then services by way of providing information technology under RTI Act. Under RTI Act, you pay some amount and collect information. That is also exempted. Then a bank providing services to account holders. To which account holders, sir? Who opened their account under Pradhan Mantri Jan Dhan Yojana. Pradhan Mantri Jan Dhan Yojana is nothing but zero balance accounts. Okay. If you open, sir, a bank providing services to whom? Account holders under zero balance account holders. For them, if any service is provided, on that service charges, there won't be any GST. Then Rehabilitation professionals. Who are rehabilitation professionals, sir? Rehabilitation professional means nothing but psychiatrists. Sir, in healthcare, we discussed about only physical health. We didn't discuss about mental health. So here, when these psychiatrists, when they are providing services by way of therapies, counseling, and any other such activities at a medical establishment, educational institution, rehabilitation centers owned by central and state governments, or at a charitable institution, when these psychiatrists are providing their services are exempted. Then toll charges also exempted. Services provided by NSDC, National Skill Development Centers, and the Skill Development Centers services also exempted. Then insurance service provided to government. Sir, we discussed insurance. There what to the normal public and all. Here insurance service is provided to whom? Government, exempted. Sir, I went on, let's say, I went to a government organization to train them regarding GST or income tax. So I'm providing training to whom? Government. When I'm providing training to government, it is what? Exempted. When I train you, you pay fees. That is taxable. Okay. Then banks, NBFCs, financial institutions, or any person give loans. On loans, what is the consideration, sir? Interest or discount. Such interest and discount is what? Exempted. Okay. Then, so all these are not important, sir. This one, sir. Entry to various events. Entry to various events like what? Like entry to museum, national park, wildlife sanctuary, tiger reserve, zoo, protected monuments. All these, sir, irrespective of the amount of consideration, these are what? Exempted. Whereas, if the entry is to circus, drama, theatrical performance, award function, sporting event, concert or planetarium, for these, if the consideration is less than 500, sir, you went to an IPL match. If the consideration is like less than 500, exempted. Above 500, na, fully taxable. Whereas for museum, national park, wildlife sanctuary, tiger reserve, zoo, protected monuments, it is fully exempted. Okay. So with this, sir, we completed what? Exemptions part. Sir, understand, to do the questions on exemptions chapter, so we can do some basic level questions and all. But the problem is, the exam questions are like, sir, so let me explain you how the institute material is. We don't have separately supply chapter in institute book. Supply, charge, exemptions, all these three chapters will be together in the institute material. So what institute is doing, like together from these three chapters, they are asking 2 7 marks questions. One is mostly in supply. The other one is coming from exemptions. But since charge, exemption, supply, all three are like same chapter, so under 3A, when they ask a question, they mix 1 or 2 points from supply also. Like negative list 1 point, or like schedule 1 related 1 point. Like that, they mix 1 or 2 points from there. Then exemption points, some 3 4 points will be given. And then RCM also they are mixing. Okay. So that's why, sir. So now I am not discussing the problems. Just like I said in the beginning of the class, charge or like RCM part, we're going to discuss again tomorrow. Once we complete the charge part, then we'll take up the questions in exemptions, because in charge there are no separate questions. So in exemptions only, there are points which are linked to even RCM also. And today or tomorrow, by the time you attend the next session, do one revision also for exemptions, because exemptions is not much about listening to the class. It's about you remembering them. It's okay. So what I did, sir, at few places I explained something. The other places and all I just read out only. It's okay. It's you who have to remember them. So once you read a question, you need to identify whether it is taxable or exempted. There is nothing like interpretation and all there. So you have to remember or you have to identify, means you need to do revision. So tomorrow by the next session, if you do a revision, then what? We'll discuss the charge provisions and all, and we can do the questions also. Okay. Now we'll take some 15 minutes break, sir, and then we'll start with ITC. Okay. So we'll resume at 7:40. It's okay. So we are starting with the concept input tax credit. We are starting with input tax credit. So input tax credit. Sir, why input tax credit? Input tax credit is given to avoid double taxation. So when input tax credit will come usually, so there is a registered person. This registered person, when he has inward supplies, this registered person has inward supplies. On this inward supplies, whatever is the tax element, such a tax element can be availed as what? ITC. The tax part can be availed as ITC. Now what to do this with this ITC? This ITC can be used to discharge the tax payable on outward supplies. So this registered person has outward supplies. On this outward supplies there will be tax. So discharge the tax on this outward supplies, ITC can be used. It's okay. It's okay. So there are like inward supplies. On inward supplies, whatever is the tax element can be availed as ITC. Okay. And that ITC can be used to discharge the tax liability on outward supplies. Now here, sir, see, let us discuss this. Why ITC, sir? ITC eliminates double taxation. ITC eliminates double taxation. Okay. Then by allowing credit for tax paid, how it eliminates double taxation. Allowing credit for tax paid on inwards at each stage. At every stage, the tax paid on inwards. Okay, so the tax paid on inwards will be given as like what? Credit. And this credit can be used to what? To set off the tax payable on outward supplies. Understand, sir? By allowing credit for tax paid on inwards at each stage. At every stage on the inwards, the tax paid can be taken as credit. And that credit can be set off with the tax liability on outwards. So let me give an example also here. Let's say inward is like 1 lakh. On this tax rate 18%, how much, sir? 18,000. So total 1 lakh 18. Now what? On inward supplies, the tax element can be availed as what? ITC. See, okay, look at this sentence. Allowing credit for tax paid on inwards at each stage. So at each stage, the tax on inwards 18,000 is taken as what? Credit. It is taken as what? Credit. Now what? This registered person, if he is having any outward supplies, sir, by allowing credit for tax paid inwards at each stage and set off with the tax payable on outwards. Let's say, sir, the outward he is selling for 1,20,000. On this 18% means how much? 21,600. Total 1,41,600. Now what? While paying this 21,600, what we can do? We can set off this ITC 18,000. So if you set off ITC 18,000, how much you are paying extra? 3,600 only. Okay. Effectively, if you see, sir, from here to here, what is the addition made? 20,000. On the 20,000, if you levy tax also, it will come how much? 3,600. So ITC, what it is doing, sir? By allowing the tax paid in the inwards, by allowing the tax paid on inwards to set off with the tax payable on outwards, effectively you are paying tax only on the value addition. Only on the value addition you are paying taxes. So with this, what happens? Okay, so here, sir, understand what? If by allowing credit for tax paid on inwards at each stage and set off with the tax payable on outwards, ensures that only value addition at each stage is getting taxed. Only the value addition at each stage is getting taxed. Okay, now inwards, sir. Sir, inwards means what? The purchases. okay, which are used or intended to be used in the course or furtherance of business. So inwards can be like what? Goods, service. I mean, you have an inward good or inward service. Inward service, we call it as input service. The inward service, we call it as what? Input service. If it is an inward good, they are called as like either capital goods or inputs. Inward goods, now they are called as what? Capital goods, and they are called as inputs. Capital goods means what? Goods which are capitalized in books of accounts. Goods which are capitalized in books of accounts. Then inputs, na, any good other than capital goods. Input means any good other than capital goods. Okay. Then here referred as, sir, so our inputs can be three types: input service, capital good, and input. So goods, na, two types. Either if it is capitalized in books of accounts, na, capital good. If not, input. Inward service is called as what? Input service. On these three, all these three, if they are used for the business only, you can avail what? ITC. And one more important thing, sir. Sir, this inward, you don't bother about whether the tax is payable under FCM or RCM. Okay, sir, some people think like if we pay tax under RCM, ITC is not available. People think like that, but forget about that, sir. RCM, FCM has no linkage about ITC. If it is your inward supply, you can avail what? ITC. Okay, remember this point first. Take it into this side. We are giving ITC not because who is paying tax. We are giving ITCs for to avoid double taxation. So whoever pays the tax, either he himself pays the tax under RCM or the supplier pays the tax. If at all it is your inward, his inward, he can avail what? ITC. So FCM and RCM is not a restriction for availing ITC. You can avail ITC. So but the common question is like, sir, I will only pay tax under RCM. I will only claim ITC. Yes, you will only avail ITC and you will only pay tax also. Understanding, na, sir? Okay. Now, this one is about manner of apportionment of ITC. Manner of apportionment of ITC. See, sir, you will get ITC. But here under GST, it's not like one tax. We have CGST, SGST, IGST, cess also. Now the common question is like, how do we adjust them? Can CGST be adjusted with all the other three? Same way, IGST can be adjusted with all the three. What are the rules for set off? Okay, on inwards you will get ITC. On outwards you will have tax payable. And it was said like ITC can be set off with the tax payable. But is it one to one now, one to many now? How it can be set off is the question. For that, what we are saying like, sir, IGST credit has to be first adjusted with IGST, then with CGST or SGST in any ratio, in any proportion. First IGST with what? IGST. Then you can adjust with CGST or even SGST in any ratio, in any proportion. Okay, then next important point, sir. Unless until IGST credit is completely utilized, you cannot start using CGST or SGST. Sir, understand the point, sir. First you should start with what? IGST credit. Has to be adjusted with what? IGST. Then with CGST or SGST in any ratio, in any proportion. Unless until IGST credit is completely utilized, we cannot start using CGST credit or SGST credit. Then CGST credit has to be first used with CGST, then with IGST, but never with SGST. Same way, SGST first with SGST, then with IGST, never with CGST. Okay, na? So nothing but SGST and CGST cannot be adjusted with each other. Okay, then the last one more, sir, point, sir, before going it to cess. Sir, if IGST is having surplus credit, first it adjusts with what? IGST. It still has credit. Then it can be adjusted with what? CGST or even SGST. But IGST credit is deficit. I mean, so IGST credit is not enough to discharge IGST liability. Then it can take from where? CGST or even SGST. But from where first? First from CGST. So understand, sir, IGST when it is giving, both are equal, CGST and SGST. When it is taking, first from CGST, then from SGST. Fine. Okay, then Unless, okay, this also done. Then the last one is about cess. Cess credit. Sir, even if any compensation cess is paid, that compensation cess also can be taken as credit. But compensation cess can be adjusted only with compensation cess liability. Okay, na? Okay, so before going into concept, sir, there are certain basic illustrations. We'll solve them. Okay, you'll find them in like in the next pages, sir. Like if you turn 2-3 pages, you'll find these illustrations in the handwritten. After blocked credit concept, you will find this. Sir, look at this question, sir. Compute GST liability and payable to Vaishnavi based on the following details for the month of August. Supplies to registered persons in neighbor states. Sir, when they are supplying to neighbor states, intrastate or interstate? Interstate, 25 lakhs. And again, supplies to unregistered person in neighbor states. That also interstate, 20 lakhs. Supplies within the state, intrastate, unregistered person, registered person, like 10 lakhs to 40 lakhs. What is the tax rate, sir, here? 18%. So on interstate, which tax? IGST will be there, 18%. On intrastate, CGST, SGST, 9%, 9%. Then they acquired even a plant and machinery for 20 lakhs. Sir, they acquired, purchased a plant and machinery. Outward or inward? Inward. Okay, for 20 lakhs from a different state. At what rate? 12% GST rate. What they will get on this, sir? IGST, ITC will come. Okay. Then purchase of raw material within the state for how much? 40 lakhs. On this also, what is the tax rate, sir? 18%. Within the state, intrastate, CGST, SGST. Okay. Out of which 5 lakhs related raw material invoice is not there. Sir, actually, if there is no invoice, you cannot avail ITC. So this 5 lakhs worth you cannot avail ITC. Only on 35 lakhs related you can avail ITC. Then availed advertisement service from a person in different state. What? IGST credit. Interstate na IGST credit. How much? 10 lakhs at a rate of 18%. And here we have what? Even opening balances of ITC also available. IGST 0, CGST 45,000, SGST 90,000. So this kind of questions we will solve in 3 steps. Step 1, first we will find out the total ITC available. Sir, how to solve? IGST, CGST, SGST. Will take 3 columns. First we will take opening balances. What are the opening balances? 0, 45,000, 90,000. IGST, CGST, SGST. 0, 45,000, 90. Then how many inwards are there? 3. On each inward we will calculate how much is the ITC available. How much, sir? On first case, 20 lakhs into 12%. How much? 2 lakh 40,000 IGST credit will be there. Okay. Then second one, sir, 35 lakhs into 9% and 9%. How much? 3 lakh. It's okay. So you'll see here. Okay. 45, 0, 45, 90. Then on plant and machinery, 2 lakh 40. Then on raw materials, 3 lakh 15, 3 lakh 15. Then on advertisement service, 1 lakh 80. So the total ITC is how much? 4 lakh 20, 3 lakh 60, 4 lakh 5. This is what the ITC available. This is the ITC available. Everybody clear, sir? Then first we got step 1 we did, sir. Step 1 is what? Computation of ITC availability. Step 2, we should compute the tax liability. Sir, tax liability is on what? So you need to pay tax on inwards or outwards, sir? Outwards. So on all these outwards we need to calculate tax liability. See, first the interstate, sir. There is a B2B transaction, there is a B2C transaction. What is B2B? Registered to registered. Registered to unregistered na B2C. So 25 lakhs into 18%, 20 lakhs into 18%. So 4 lakh 50, 3 lakh 60. Then we have here intrastate also. On intrastate what tax, sir? CGST, SGST. 10 lakhs into 9%, 9%. 40 lakhs into 9%, 9%. So 90, 90, 3 lakh 60, 3 lakh 60. So if you do the totals also, you will get what? The total tax liability also. How much? 8 lakh 10, 4 lakh 50, 4 lakh 50. Now what is the third step, sir? The step 3 is like you need to find out the GST payable through cash ledger. You need to find out the GST payable through cash ledger. So how to do? This is the liability. First, IGST. What we have to adjust? IGST grade. So 4,20,000 you adjust. Still, tax liability is there. That is payable. Now, here CGST is how much, sir? 4,50,000. You will adjust 3,60,000. Here 4,50,000. You will adjust 4,05,000. Then what is the tax payable, sir? 3,90,000, 90,000, 45,000. This is the tax payable through cash ledger. This is first illustration. Okay, then we'll go to second one, sir. Prasad is a registered person from Hyderabad. Is from where? Hyderabad. Has the following inwards and outwards. Compute his GST payable through cash ledger for the month of November 2025. Okay. Outwards, inwards are there, and opening balances of ITC is also there. So what we have to do first? Step 1 what? Computation of ITC available. We'll take what? 1,20,000, 40, 40. Then on inwards. What are the inwards, sir? First one. Plant and machinery from registered person Bangalore. How much? Sir, he is from where? Hyderabad. But he purchased from where? Bangalore. So which credit? IGST grade. So 40 lakhs into 18%. How much, sir? 7,20,000. Then raw material from a registered person who is there in Hyderabad. Sir, he is where? Hyderabad. This also from Hyderabad. So 30 lakhs into 12%, na? 3,60,000. Sorry. 30 lakhs into 6%, 6%, 1,80,000, 1,80,000. Then packing material purchased from unregistered person. Sir, when you buy from unregistered person, you will not get any ITC because unregistered person cannot even collect taxes. So there won't be any tax on it. You will not get ITC. So nothing here. Then availed lawyer service from Delhi. Sir, understand lawyer service is covered under RCM. But is it makes any difference to avail ITC? Whether it is FCM or RCM, you can avail ITC. So on this also you can avail what? ITC. So 20 lakhs into 18%, total how much? 3,60,000. So total ITC available is how much? 12 lakhs, 2,20,000, 2,20,000. So now the question is, second step is what? Step 1 we calculated the ITC available. Then step 2 is what? Computation of tax liability. Sir, liability is what? B2B is there, B2C is there. On this we need to calculate the tax like IGST, CGST, SGST. But not only this, you have another liability also here. RCM liability also there. But remember one point, sir. FCM liability, sir, understand. ITC can be adjusted only with the tax payable on outward supplies. If you are paying RCM tax, is it on outward supplier, inward supplier? If you are paying tax on RCM supplies, are you paying tax on your outward supply, inward supplier? Inward supply. So with that you cannot adjust ITC. So ITC can be adjusted only to discharge tax payable on what? Outward supplies. That's why for that reason you will calculate separately FCM liability, RCM liability. Now you have a question. Sir, then how I have to pay RCM liability? RCM liability shall always be discharged through cash ledger only. So in step 2, when RCM point is there, you will not calculate the total liability once. You will calculate separately FCM liability and then RCM liability. Okay, see here. FCM liabilities are first B2B related 3,60,000, 1,20,000, 1,20,000. B2C related 2,25,000, 2,25,000, 2,60,000. You got total FCM liability and separately even RCM liability 3,60,000. Sir, even though you have enough credit, but this 3,60,000 you have to pay only through what? Cash. So keep this 3,60,000 aside. Now ITC can be adjusted only with what? 6,30,000, 3,45,000 and 3,45,000. These are the liabilities. Sir, what is the credit? IGST credit is available is how much? 12 lakhs. First we should adjust with what? IGST. Then the balance you can adjust with CGST or even SGST. Here I adjusted like equally to both CGST and SGST. Then CGST credit how much is there, sir? 2,20,000. But the balance still payable is only 60. So adjusted 60, still how much is there? 1.6 lakhs. Same way SGST also you adjusted, still balance how much is there? 1.6. But this can be, this balance credits will be carried forwarded to next month, whereas this 3,60,000 has to be paid through cash ledger only. Sir, everybody, you are getting some clarity right over here. It's okay. So first one, sir. Sir, under ITC, the sections we are having are like 16, 17, 18, 19, 20, 21. But understand, sir, 19 is related to job work. And then 20, 21 are related to ISD. ISD na input service distributor. These two are not important for the purpose of exams. They are not asking in like exam. So I'm not covering here. So the important areas are like what? 16, 17, 18. Okay. So in 17 and 18 we'll have advanced concepts like what? ITC reversals. Okay. So this ITC reversal concepts and all will be there in the 17 and 18. Even blocked grade also will be there in the 17, but blocked grade also a basic level only. Okay, 16 basic level, and even in 17 also up to blocked grade basic level only. But there is like reversal concepts also there which are like advanced level. So now where the question is being asked? Sir, they are asking sometimes in the basic level problems like the calculation of ITC, like then finding out the tax liability, that part they are asking. And even sometimes advanced part also asking. So you need to learn these three concepts full-fledgedly only. 16, 17 and then 18. Okay. So first 16. Who is eligible to avail ITC? Registered person. As per the manner specified in section 49. Nothing but like the pattern which I said. The input tax on inward supply of goods and services are both in the course or furtherance of business. So the tax on inward supplies which are going to be used for business purpose, that tax part you can avail as ITC, and which will be credited into the electronic credit ledger, where it reflects our electronic credit ledger. Okay, one important point, sir. Sir, here for availing ITC, there is no difference between normal goods and capital goods. Even though capital good, you are not taking the ITC in installments and all, because capital good actually the life extended for multiple years, but the credit you are availing at once only at the time of purchase only. Just like as like a revenue item you purchase, even a capital good you purchase also, same way you are availing ITC. There is one thing, sir. But pre-GST era, sir, on capital goods, ITC is not availed at once only. Okay, only 50% in the first year, balance in the subsequent years. But now there is no such rule. The total ITC can be availed in the month of purchase itself. Okay, provided all the other conditions also satisfied. This is 16 subsection 1. Then now 16 subsection 2, very important, sir. It talks about 6 conditions. Only when these 6 conditions are satisfied, you can avail ITC. What are those? First one, goods and services must be received. Only when the goods and services are received, you can avail ITC. But exceptions are bill to ship to model. Yesterday I explained bill to ship to model, sir. What is bill to ship to model? Like a triangle kind of, sir. A, B, C are there. C orders from B, B orders from A. But actually what has to happen? A should deliver to B, B should deliver to C. But instead of that, what happens? A directly sends to C. C, K, D, M. K orders with D, D orders with M. Now, M invoiced to whom, sir? Sir, here, correct this arrow, sir. It's not this way, sir. It has to be this way, reverse. And even this one also. The arrow has been pointed in wrong way. It's okay, sir, understand. K ordered goods with D. Then who will raise invoice to K? D only raises invoice to K. Then D ordered goods with whom? M. Then M only raises invoice to D. So now here 2 supplies are there. What are the 2 supplies? One is between M and D. The other one is like between D and K. 2 supplies are there. M and D, D and K. But the goods are not sent by M to D and D to K. Directly the goods are sent from M to K. Now, sir, here this also a supply. What is our point? This is also a supply. This is also a supply. But here if you look from K perspective, K receives goods or not? Yes, ultimately K is receiving goods. So no problem, he can avail ITC. But the problem is D. Sir, with respect to this transaction, D is not receiving goods. He has an invoice. He recorded as a purchase, but he didn't receive goods. Since he didn't receive goods, actually he cannot avail ITC. But the exception says like, even though he didn't receive goods, we should assume like what? As if the goods are sent to D, and from D only they are sent to K. So even though D didn't receive goods, actually we have to assume like he has received goods and D can avail ITC. So the exception for the actual receipt of goods is what? Bill to ship to model. In bill to ship to model, even though goods are not received, actually still this person, this middle person, we call it as third party, he can avail ITC. Understanding na sir? Okay. Then see, in this case, even though D didn't receive goods, actually he can avail ITC. Then first one is what sir? First condition, goods must be received. Only when the goods and services are received, ITC can be availed. Only one exception is there. What is that? Bill to ship to model. The third party is there in between. That third party, even though he didn't receive goods, actually still he can avail ITC. Okay. Then invoice or tax paying document should be in possession of recipient. Invoice or tax paying document should be in possession of recipient. Sir, understand? Invoice by supplier, invoice by recipient, or sir, usually who will give invoice? Supplier. But in case of RCM, if supplier is unregistered, then recipient himself will raise a self invoice. That's called what? Invoice by recipient. Or there will be sometimes revised invoice. When revised invoice? From date of liability. Sir, you applied for registration within 30 days from date of liability. Then your effective date is what? Date of liability only. But you got certificate after some 35 days or 40 days. All this intervening period, you are counted as registered person only. But you don't have a GSTN number. So, okay, you give some invoice without a GST number. But once you get a GSTN number, what you have to do? All the invoices you raised in this period has to be revised, and that is called as what? Revised invoice. So invoice by supplier, invoice by recipient, revised invoice, and there is even a debit note, bill of entry, or a document invoice issued by ISD. Out of this, any one document should be there with recipient. Then only you can avail ITC. So one tax paying document should be there with the recipient, and it should contain details like GST number, value of supply, place of supply, amount of tax, description. These details should be there. Then only it is called as a valid document. Two conditions are: first one, goods and services must be received. Second one, recipient should contain a invoice. So if only if these two conditions are satisfied, then ITC can be availed. There are other conditions also. Next one. So this one we'll discuss towards the last point, as a last point. Then come to fourth point. Sir, to avail ITC, first recipient should have what? Invoice. Then such invoice should be uploaded by the supplier in his GSTR1 or IFF, invoice furnishing facility. Either in GSTR1 or in invoice furnishing facility, that supplier has to upload that one. Then it should reflect to the recipient where? In GSTR 2A, 2B. Okay? Only when it reflects there, recipient can avail ITC. If any invoice not reflecting in 2B, he cannot avail ITC. So the details of invoice or debit note with respect to inward supply of goods shall be reported by supplier in GSTR1, and the same shall auto reflect in 2A, 2B. Okay, then even though it reflects in 2A, 2B, sir, I said like, okay, even a small amendment is there, and we discussed also 2A, 2B is no, 2B is no more called as what? Auto-generated statement. It's a controlled and restricted statement. Why? Because now it does not directly reflects whatever the credit it gets from the invoices under GSTR1. It again bifurcates it to eligible ITC, ineligible ITC. So even though it reflects in 2A, 2B, it shall not be restricted. If it is restricted, it can't be availed as ITC. Understanding na sir? So first one, invoice must be there. Sorry, first one, goods must be received. Second one, invoice must be there. Third one, such invoice should be shown in GSTR1 and should reflect to the recipient in 2A, 2B. Fourth one, even though reflects in 2A, 2B, it shouldn't be restricted. Four conditions. Then fifth one, sir, you being a recipient, to avail ITC, you should file your monthly return 3B. Only when you file 3B, you can avail ITC. So written under GSTR 3B, section 39 has to be furnished. 5 conditions, sir. Now 6th condition. Sir, now tell me my basic question, sir. When a supplier usually pays GST? While filing GSTR 1, GSTR 2A, 2B, GSTR 3B? 3B. By when 3B has to be filed? 20th of succeeding month. Okay. But a recipient avails ITC based on supplier GSTR 1, supplier GSTR 3B? Based on supplier's GSTR 1. 1 has to be filed by when? 11th of succeeding month. That means supplier filed already GSTR 1. Let's say me being recipient, it reflects to me on 14th. So, okay, from 14th I can see my ITC. Okay, by 14th does supplier pay taxes? He has time till 20th. So, he may not have paid taxes. But actually it's reflecting to me as ITC. And I might have availed ITC on 14th itself, 15th itself, or even 16th also. So, now before payment of tax by supplier also I am availing ITC. So that means that availment, practically we are availing ITC even though supplier didn't pay the taxes to the government. So that availment is provisional basis, because the actual availment can happen only when the supplier pays the taxes to government. But practically what happening? We are availing ITC even though supplier didn't pay the taxes. But that availment is on what basis? Provisional basis. So the supplier has to pay the taxes. If he didn't pay, then our ITC availment has to be reversed. Okay. Now they given a time limit also by when the supplier has to pay the taxes. It's okay. So what they are saying? A registered person availed ITC with respect to invoice debit note for which supplier reported GSTR 1. You are supplier. You filed GSTR 1. Based on that I availed ITC. Okay. But what you are not doing? You are not filing 3B. Sir, why you filed 1 and not filing 3B? Sir, with 1 no tax compliance and all. You just show invoices. I'll get ITC. With 3B only you have problem, because through 3B only you have to pay taxes. You filed 1, not filing 3B. But based on your GSTR 1, I availed ITC and I am enjoying ITC also, but government is losing, because government didn't got any tax amount, but it is availing, it is providing ITC. So registered person availed ITC without invoice debit note for which supplier reported, with respect to invoice or debit note for which supplier reported GSTR 1 but did not furnish 3B by when? 30th September of succeeding financial year, sir. Sir, government actually here so liberal. It's not asking the supplier to pay immediately also. It is giving time till next financial year 30th September. By then if supplier pays also no problem. Even by that time also supplier didn't file 3B and didn't pay taxes, then recipient has no other choice. He has to reverse the ITC which is availed by when? 30th November of succeeding financial year. Sir, by 30th September of next year or succeeding financial year, if supplier didn't pay taxes, then recipient has to reverse by when? 30th November of succeeding financial year. Are you able to understand, sir? Where supplier, sir, by November, me being recipient, I reversed. Reverse na. Sir, actually there is no concept of reversal and all. I need to pay it again. Okay, I need to pay it as like a tax liability. Since first I used ITC, to reverse it, again I will pay it as a tax. Okay, now after November, supplier filed 3B and paid taxes. Now default corrected, right? Now again I can what? Re-avail ITC. See, where supplier furnishes 3B subsequently, the recipient also can re-avail ITC through GSTR 3B. Okay, then. So these are the 6 conditions, sir. What are the 6 conditions, sir? Must be received. Second one, invoice must be there. Okay, then this payment point we'll discuss last only. Then what? Supplier should report that invoice or debit note in 1 and it should reflect to the recipient in 2A, 2B. Even though reflect in 2A, 2B not restricted, recipient has to file 3B. And the last one, supplier has to pay the tax to the government. By when? At least by 30th September of succeeding financial year. By then also if he doesn't pay, then recipient has to reverse the ITC by 30th November of succeeding financial year. If subsequently supplier pays, then recipient also can re-avail. Got it, sir, everybody? Okay. Then provisos. There are 2 provisos for section 16 subsection 2, sir. First proviso. The proviso one says like, where goods are sent where, sir, there are like, you ordered 100 tons of goods covered under a single invoice. But 100 tons cannot be sent in a single consignment. So, okay, there is no truck which can carry 100 tons and all. So that's why they are sending like 20 tons once, 20 ton once, like in 5 different consignments they are sending the total goods which have been ordered. And it took 3 months to get all those 20 tons and all. Now the question is, when you can avail ITC? So you can avail ITC only on receipt of last lot or last batch or last installment. You cannot avail proportionately. You cannot avail on the first lot itself. Only on receipt of last lot or last installment ITC can be availed entirely. Okay. Then proviso 2. What is this proviso 2? Sir, see, supplier supplied goods and services to recipient. Supplier supplied goods and services to recipient. Now what recipient has to do? He has to make the payment within 180 days from date of issue of invoice. Within how many days, sir? 180 days from date of issue of invoice. Failure to do so. That means what? He didn't make the payment within 180 days from invoice. Then what happens? Recipient has to, since he didn't pay the payment to supplier within 180 days, he has to reverse the ITC which he has availed. By when? Sir, let's say 180 days expired in February month. Then while filing the return of February month, sir, when February month return will be filed? March 20. So while filing the February month return, the ITC has to be reversed. Reverse na nothing but you will add it to your liability and pay that also. Okay. Along with interest at a rate of 18% per annum from date of availment to date of reversal. Understand, sir? Recipient, when he fails to make the payment to supplier within how many days? 180 days from date of issue of invoice. Then recipient has to reverse the ITC. When? While filing the return of the month in which 180 days expires. Let's say 180 days expires in August month. Then when August month return has to be filed? By September 20. When he files, he has to reverse the ITC along with interest at a rate of 18% per annum from date of availment of ITC to date of reversal. Everybody, sir, are able to get it? Then where a part amount is unpaid, then what? Proportionate reversal. I mean, he paid, sir, 10 lakhs is the total value. He paid 2 lakhs. He paid 3 lakhs. Then unpaid amount is how much? 7 lakhs. Then to that unpaid, 70% relevant ITC only has to be reversed. In proportionate to the amount unpaid only, ITC has to be reversed, not full reversal. And then exceptions to proviso 2 of 16 subsection 2. So look at the material, sir. These 3 points might not be there. They are given there or else not there. It's in handwritten, sir. Everybody, if you are following handwritten, check there. So these exceptions may not be there in your handwritten. There might be some other points will be there, sir, which were given wrongly. So strike off them and you will need to write these 3 points. Sir, exceptions. Exceptions means what? In these cases, this proviso is not applicable. When? If they are like RCM supplies. I mean, the tax is payable under reverse charge mechanism. In that case, this payment to be made within 180 days concept is not applicable. Second one, if they are like deemed supplies. What are deemed supplies, sir? Schedule 1 transactions. Transactions which are treated as supplies even though there is no consideration. So in those deemed supplies cases also, this exception is not applicable. Sir, why? Because in deemed supplies there is no consideration at all. If there is no consideration, how he can make the payment within 180 days? So that's not possible. That's why in RCM supplies, deemed supplies, and third one, sir, to the extent of value of supply where obligation of supplier is met by recipient. To the extent of value of supply where obligation of supplier is met by recipient. To the extent of value of supply where obligation of supplier is met by recipient. I mean, sir, actually 10 lakhs is the supply value plus 2 lakhs which has to be the liability of supplier. Sir, you purchased goods from a person, you paid to that person 10 lakhs, and then extra that supplier has to pay some 2 lakhs to some X person. That 2 lakhs also paid by you only. For example, simple thing, sir, you paid BCA coaching fees of 1 lakh rupees, and even you paid some other BCA expense also 50,000. So now totally how much you paid to BCA? 1.5 lakhs, right? So the value of supply should be how much, sir? 1.5 lakhs. Okay. But how much out of this 1.5 lakhs you paid directly to BCCA? 1 lakh only, because other 50,000 you didn't pay directly to BCCA. On behalf of BCCA, you paid to someone else. Now, since only 1 lakh is paid to BCCA, the other 50,000 you cannot say like not paid to BCCA, and you cannot reverse the ITC and all. That's why they are giving an exception to the extent of value of supply, that 50,000 where obligation of supplier is met by recipient. So that part. Are you able to understand, sir? Then depreciation amount, sir. Sir, see, there's a plant and machinery purchase for 10 lakhs. On that GST element is 1 lakh 80. Total how much? 11 lakh 80. Sir, in income tax, if you capitalize 11 lakh 80,000 and if you are charging depreciation on 11 lakh 80,000, then you cannot avail ITC. Then to get ITC, what you have to do? You should have capitalized only 10 lakhs. Then you can avail, and you should have capitalized only 10 lakhs and depreciation also availed only on 10 lakhs. Then you can avail ITC of 1 lakh 80,000. If tax part also capitalized, and on tax part also if they are availing depreciation in income tax, then ITC is not available. Okay, this is what 16 subsection 3. Then 16 subsection 4 is about time limit for availing ITC. So 3 years back one invoice is there. That time you forgot. Now you found out that invoice and you wanted to claim ITC now. Is it possible? No, sir, there is a time limit. The time limit for availing ITC is like 30th November of succeeding financial year. What? 30th November of succeeding financial year, or actual date of filing annual return, whichever is earlier. So what? 30th November of succeeding financial year, or actual date of filing of annual return, whichever is earlier. Got it? Okay. Then 16 subsection 5. So not, okay, not an useful section, sir, these days. Like what? Sir, the initial days of GST, like 17, 18, 18, 19, 19, 20, 20, 21, there are so many issues, like the software related issues, and the people mostly not understanding these provisions, forms and all. So there are a lot many issues. That's why for 17, 18, 18, 19, 19, 20, 20, 21, not, instead of 16 subsection 4 time limit, they are giving an extended time limit for availing ITC. For not for the current year, sir. Only for those 4 years. What are those? 16, 17, 17, 18, 18, 19, 17, 18, 18, 19, 19, 20 and 20, 21. For those years, the registered person shall be entitled to take ITC, any return which is filed up to 30th November 2021. Got it? Okay. Then 16 subsection 6. 16 subsection 6. What? Sir, this is also an extended time limit. First you should understand the issue, sir. Okay. Sir, in the next page it will be much more clearly explained. So you come to the next page rather than here. You come to the next page, you'll understand it much more better. You see this, right? Okay. Sir, a person registration has been cancelled on, let's say, 1st May 2024. His registration has been cancelled. Sir, once his registration is cancelled, he cannot avail ITC. But by 1st May, he has some invoices, like the April or March related invoices are there on which he has to avail ITC. But his registration got cancelled, so he didn't avail ITC on them. They are like pending only. Now, immediately he applied for revocation of cancellation. Revocation of cancellation means what? He is asking to restore his registration back. For that he made an application. But the application was like pending only. It was like processing and all. Or else he made an appeal. Like to give back his registration, he went to the appellate authority and he made an appeal. So okay, that was going on. Sir, in all this period also he is carrying business only. When he is carrying business, he is getting invoices, but he is not availing ITC because his registration is cancelled. Finally, his registration was revoked. I mean, he got his registration back either through appeal process or because of the normal section 30 process. He got back his registration when? 1st November 2027. When is registration cancelled, sir? 2024. He got back when? 2027. Almost 3 year 3 months, not 3 year 6 months. He doesn't have registration. But all this period, he continued business. He received invoices, but on them he didn't avail ITC. Now, to avail ITC, the problem is what? The time limit is expired. Because 16 subsection 4 talks about a time limit. What? 30th November of succeeding financial year or annual return filing date, whichever is earlier. The time limit might have been expired for so many years because it is already 3 year 6 months. So it is an unjustified thing, right? So what? Sir, actually he didn't did any mistake. The officer only, he misunderstood and cancelled his registration. Now he is fighting back for his registration. It took 3 years 6 months for him to get back his registration. Finally he got the registration, but he is losing ITC. So without any, I mean, for not having any of his fault, he is losing ITC. That's why to give him that ITC benefit, an extended time limit has been provided. What is that? See, for the invoices which are there before cancellation and invoices related to cancelled period, an extended time limit is available to avail ITC. What is that? Sir, 2 steps, sir. First one, sir, we need to calculate the normal time period. What? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Step 2, this step 1 time period or 30 days from date of revoking. Sir, 1st November 2027 is there, na? Revocation day, plus add 30 days. 30 days now what? Till 1st December 2027. Either this day or the normal calculation day, whichever is latter will be the time limit, whichever is latter. I mean, even though time period expires, from the date of getting back his registration, he has 30 days time to get his ITC. It's okay, na, sir? So with this we completed section 16. So we have still what? 17 and 18. Okay. Sir, then we are moving on to 17 subsection 5. It's about blocked credit. Sir, blocked credit means what? These inwards may be taken for his business purpose only, but still ITC is not available. These are inwards, may be related to business only, but still the law or the section specifically says like on these situations or with respect to these situations ITC is not available. So first one, sir, see here there is an immobile property. With respect to construction of this immobile property, either works contract might be taken. What is works contract? Works contract means the contractor only has to supply both goods as well as services. Or you might have taken separately. Construction service, goods like cement, iron, separately. Any way you take, you will not get ITC. Okay, with respect to immovable property, either you take works contract or you take construction service separately, or like cement, iron you purchase separately. In any case, with respect to immovable property, you will not get ITC. Okay, then immovable property excludes plant and machinery. Immovable property excludes what? Plant and machinery. If this immovable property is plant and machinery, then you will get ITC. If it is like a building and all, you will not get ITC. Okay. However, plant and machinery again excludes mobile towers and pipelines laid outside factory premises. So if there are like mobile towers constructed or installed, on them you will not get ITC. If there are any pipelines laid outside factory premises, on them also you cannot get ITC. So understand, sir, on immovable property, you might have taken works contract service or construction service or like goods separately. On both you will not get ITC. Okay. But understand, sir, ITC available if such contract or service is provided with respect to repairs of immovable property, then ITC is available. But with respect to construction of immovable property, either works contract taken or separately the construction service and goods were taken, then also ITC is not available. But on immovable property is plant and machinery, then ITC is available. But again, plant and machinery excludes what? Pipelines laid outside factory premises and mobile towers, on them ITC is not available. Then, sir, understand here. Sir, B is a person who said like who is providing construction services to BCCA. Now on this service, BCCA can avail ITC? Yeah? No, BCCA ITC not available. But actually, sir, B A is providing construction service. I mean, B is not actually constructing. He outsourced it to A. That means A is providing to whom? B. Okay. Now both these two persons are under what? Same line of business. Both are in the construction sector only. Now on the A invoice, B can avail ITC. But on B invoice, BCCA cannot avail ITC. What's the problem? Because BCCA is into education, whereas these two people are into the same line of business. Understanding na, sir? Okay. Then a clarification, sir. Like ducts and manholes used in the network of optic fiber cables. I mean, to lay this internet cables and all underground, ducts na, the outer pipes and all which will be kept to keep these wires and all protect. Okay. So those ducts, and at junction points and all, they'll keep manholes and all. So if any if any issue happens now, there they can open and check where the problem is there and all. So if any ducts and manholes are there, those are like plant and machinery only, hence on them ITC is available. So understand, sir, on plant and machinery ITC available. Ducts and manholes are to be treated as like what? Plant and machinery only. Whereas mobile towers, pipelines laid outside factory premises are not plant and machinery, so ITC is not available. Then motor vehicles. Sir, motor vehicles, we need to check whether they are designed for transportation of goods or passengers. Meant for transportation of goods, ITC available, no question about it. If they are meant for transportation of goods, ITC available. But if they are meant for transportation of passengers, then again we need to check two cases. Seating capacity more than 13, less than or equal to 13. More than, seating capacity more than 13 or less than or equal to 13. Sir, seating capacity more than 13. Sir, more than 13, what motor vehicles will be there, sir? Buses like mini buses and the normal buses only will be there. On them ITC is available. Okay. But if the seating capacity is within 13, the car, tempos and all will come. So on them ITC is not available in general. But there are three exceptions. What are those? If such person is running a driving school, he can avail ITC. If such person rents the motor vehicles, rents, hires or leases the motor vehicle, then he can avail ITC. Third one, he buys motor vehicle to further supply them. I mean, he is a car showroom guy. He buys cars and he sells the cars. Then he can avail ITC. So these three people can avail ITC. Who's three? Driving school guy, who rents or hires or leases motor vehicle, or who is like a dealer of cars, who further supply cars, he can avail ITC. Okay, sir, I purchased the car and I am using it for my business or profession only, but I can't avail ITC. It is what? Blocked credit only. Okay, then, sir, this demo vehicle clarification not even important. Then come to aircrafts and vessels. Aircrafts and vessels, we need to check what? Again, same thing. Meant for transportation of goods or passengers. Meant for transportation of goods, ITC available. Meant for transportation of passengers, then ITC is not available. Meant for transportation of passengers, usually not allowed. But again, three exceptions. What? First one. But for, sir, car, motor vehicles, now we call driving. Here we'll not call driving. We'll call it as like flying skill or navigation skill. If he is like imparting flying skill or navigation skill, then he can avail ITC. Again, renting, hiring, leasing, he can avail ITC. Or is a further supply of those vehicles. I mean those aircrafts. And sir, I am a dealer, like I'll sell aircrafts. For that I am buying aircrafts. So on buying I can avail ITC. On selling I can use it for tax payment. Okay. So these three are common exceptions are what? Imparting flying navigation skills, business of hiring, renting, leasing for further supply, or if ITC can be availed on motor vehicles, aircrafts and vessels, then ITC can repairs cost, insurance cost also can be availed. Then goods and services received by a NRTB except on goods imported, ITC is what? Blocked. Sir, who is called NRTP? Non-resident taxable person. Which return he has to file? GSTR 5. By when it has to be filed? 13th of the succeeding month or 7 days from last day of validity, whichever is earlier. You remember, right? Yesterday we discussed. Okay. So such person, if he buys any goods domestically within the country, on them he cannot avail ITC. If he brings anything from outside India, on them the GST element he can avail ITC. But you have a question, sir, if he brings from outside India, why GST will be there? Sir, at the time of customs, there will be even some part of GST. That part can be availed as what? ITC. Okay. Then, goods are destroyed, lost, stolen or disposed by way of gift or samples, or goods are used for personal consumption. Sir, during the transit or any period, goods were disposed, lost, stolen or given as gift samples, then you cannot avail ITC. Sir, you availed ITC, then they were lost. Then it has to be treated under Schedule 1. Permanent transfer or disposal of business assets on which ITC has been availed, treat them as deemed supply. Sir, already they were lost. Okay, before I availing ITC only, they are lost. Then I should not even avail ITC. I availed ITC and kept in my warehouse. Then there was like a damage happened or a theft happened or given them as like samples and all. Then since already availed ITC, now what I have to treat them as like permanent transfer or disposal of business assets on which ITC has been availed. What I have to invoke? Schedule 1 deemed supply concept has to be invoked. Understanding, na sir? If goods are used for personal consumption, then also ITC is blocked. Then in any tax paid consequent to fraud cases, detention, confiscation, then also ITC is blocked. Then these sets are important. Health service, plastic surgery, cosmetic beauty treatment, catering, food and beverages, membership of club, fitness center, rent a cab service or travel benefits extends to employees on vacation. Sir, all these are like business related or personal? Sir, in general, if we take, it is like personal only. So then obviously no ITC, no question of 17.5 also. But employer paying for all this and providing them to employee. Then why employer is doing all this? For business purpose only, na? It's okay. So once he provide all these things to employee, na, then employee will be more loyal towards the company and he may work much more better to the company. Or to retain the employee is keeping all these, he is providing all these things. So health service, plastic surgery, cosmetic beauty treatment, catering, food and beverages, membership of club, fitness center, rent a cab, travel benefits extended to employees on vacation. All these services, if they are provided by employer to employee, for employer, all these are what? All these are like what? All these are related to his business only. But still what? ITC is blocked. ITC is blocked. Okay, sir. For employees related, if any employee has any health related and all ailments and all, who is providing the treatment? Employer only paying the bills. Okay, so obviously this cosmetic and beauty treatment may not be there, but others will be there. Like what? Catering, food and beverages, membership of a club, fitness center, rent a cab. For employees, cab service is being provided, and then travel benefits provided to employees on vacation. All these are like what? Okay, on all these cases ITC is blocked, but there are exceptions, sir. See, first one. These are provided to employees because of a statutory obligation. Sir, there was a rule. Let's say, for example, there is a rule kept like for all the night shift employees, mandatorily cab has to be provided. Then employee is providing cab. On that, if any tax element is there, he can avail ITC. Then Factories Act mandates like a factory okay. So Niranjan, his question is like, is the Super 50 published earlier sufficient for June 2026 attempt? Sir, understand. Super 50 questions, like in the past I have recorded a video Superthon. Like in Superthon, what I did means like from every chapter, the important areas of exams and the relevant questions I have been discussed. And that video is still relevant only, but you need to check for amendments. So, okay, and the same areas are like still important even for June 2026 exam also. So, but the only thing is like you need to check for amendments. It's okay, if at any place amendment is missed, I cannot tell you all the places like where. That's why I'm coming up with this revision series. So you can follow this, and whatever the questions we discuss here, you mark them as like the Super 50 or Super 100 questions. That alone you practice on the day before exam also. Okay, I'll discuss questions also here. Okay, maybe if today time is not there, at least by tomorrow also I'll discuss questions, the important questions from each and every chapter we are covering, unless if it is like a pure theory chapter. Okay, so from exemptions I'll discuss questions, from ITC also I'll discuss the important questions, even the coming chapters also like value of supply, like time of supply, there also those important questions and all I'm gonna discuss. So you follow this series, and whatever the questions I discuss, those are only like the Super 60 or Super 70 or how much ever the number comes, those questions you can refer to them on the day before exam. That is one thing. So, okay. So again, I may not publish a separate Super 50 PDF and all. Then what else is the question? Sir, we would reverse the ITC for the deemed supplies. Lakshmi will not reverse. Reverse only. Like we'll pay. Sir, for deemed supplies, what happens? We'll again treat them as supplies and will pay tax. Sir, instead of reversing, what happens? You are again paying the taxes. Sir, understand, services provided under a statutory obligation or supplier and recipient are in the, under a statutory obligation when supplier and recipient are in the same line of business. What is same line of, sir, statutory obligation point I said. Okay, one more example also. As per Factories Act requirement, a factory which has more than 250 workmen has to mandatorily maintain a canteen. To maintain a canteen, you should buy what? Food and beverages. So then on the food and beverages, the factory can avail ITC. Okay, because it is because of a statutory obligation. Then both supplier and recipient are in the same line of business. Sir, there is like a restaurant, like there is a restaurant here, and to this restaurant a catering service is being provided. Not restaurant providing catering. Sir, I started a restaurant, but I don't have any chef and all. So what I'll do, I just opened a restaurant, I given catering service to someone. Okay, now they will be providing me the food. I just serve the people and I provide the ambience and all to keep the food only. So I'm running a restaurant, but I'm taking catering service from someone else. Since both these are under the same line of business, this restaurant can avail ITC on the catering contract and all. Both are into the same line of business, then they can avail ITC. Now the third one, much more important, sir. Such goods and services are used by a registered person as an element of taxable composite and mixed supply. Sir, I'll give you a simple example, sir. You remember Rajdhani train? What it is, composite or mixed? Okay, what is the bundle there? One is like transportation and meals. Sir, that meals is not cooked by railways. Railways is taking like a like catering service. Then what? The question is, on that inward catering service, railways can avail ITC or not? Sir, is it providing composite supply or mixed supply, right? We know it is composite. If not composite also, it becomes what? Mixed supply. So to provide that supply, that food is the food is an important element. So let's say, for example, you are traveling on a train. Like it was mentioned, like even food is also being provided. But in the midway, when you asked for food, they are saying like no food is available. Will you accept? What you will do? You'll fight almost with them. You'll put it on Twitter. You'll put it on Instagram, everywhere. Like railways cheated us. Okay, I didn't even brought anything. Now nothing is available. I'm hungry. I'm starving. All this you'll put, right? So you'll not leave it easily. That means it's an important element in the bundle. That's why to make their outward supply, the bundle of outward supply, this part is becoming an important inward element. So railways also can avail ITC on that catering service. Are you able to understand, sir? So these are like, if any bundle of service is being provided, and in that bundle, any of these services are like an integral element, then on that particular element also you can avail ITC. Okay, these are what? Blocked credits. All these are like what? Blocked credits. Then, sir, we discuss these illustrations. Then it's okay, sir. Come to 17 subsection 4. Special provisions for banking, NBFC and financial institutions. Sir, actually, sir, what is the major income for banks, NBFCs and financial institutions? Interest. Interest exempted or taxable? Exempted. Sir, we covered 17 subsection 5, but we didn't cover 17 subsection 1, 17 subsection 2, 17 subsection 3. What will be there in those sections means, when a person provides both taxable supply, exempted supply, both taxable supply and exempted supply, and he has common inputs. He uses the same inputs to provide a taxable supply as well as exempted supply, then he cannot avail full ITC. Only proportionate to that of taxable supply only he can avail ITC. To the extent of exempted supply he cannot avail ITC. For that only two rules are there. 42, rule 43. Like there is like a big format and all will be there. How do we calculate and reverse the ITC? Okay. Even for banks also, that is one option. Like what? They can follow rule 42, rule 43 and they can calculate how much has to be reversed and how much can be availed. That is one option. But for banks and NBFCs, financial institutions, sir, there is even a second option also. Sir, what is this second option? See, ITC on inwards from others. ITC on inwards from others. We need to check what? sir, for banks, NBFC, financial institutions, simply what they are saying means out of the total credit, sir, okay, I'll tell much more simply than this. First, whatever the inwards you have, you divide them into two types. Whether it is from your distinct persons, who are called distinct persons, their branch only called as distinct person. So, okay, we are referring to whom? Banks, NBFC, financial institutions. So, SBI Hyderabad, let's say for SBI Hyderabad, what could be distinct person? SBI Bangalore, SBI Mumbai, SBI Pune, all those are like what? Distinct persons only. From distinct persons, if they receive any inwards, keep them one side. All the other inwards, keep them one side. Okay? Whatever the inwards that are from distinct persons, on them 100% ITC available. Whichever they received from their distinct persons, 100% ITC is available. When they received from outsiders, then again divide them, eligible, ineligible. Ineligible one, anyhow ineligible, now leave them. Eligible ITC into 50%. Okay, are able to understand, sir? From their distinct persons related inwards, they can avail full ITC. From outsiders, if they receive any inwards, out of the eligible ITC, they can avail 50%. This is one option. Okay. Either they can follow rule 42, rule 43, that whole format, and can reverse. Or the other option is what? This one. Like from their distinct persons, they can avail full ITC. From outsiders, eligible ITC into 50%. This can be availed. Then this is from 18 subsection 6, sir. This is about reversal of credit tax liability. Reversal of credit tax liability on transfer of capital goods. Sir, what you are saying? Sir, on capital goods, whether they are availing, whether they are giving ITC at a time or giving in installments. Sir. For capital goods, they are giving ITC at a time, right? Sir, under ITC chapter, the provisions are framed that assuming the useful life of a capital good will be always 5 years. The useful life of a capital good will be how much? 5 years. But they are not apportionating the ITC for 5 years and giving like first year this much, second year this much and all. They are giving full credit first year itself, and they are expecting you, or they are believing that you will use the capital good for how many years? 5 years. Okay, so you availed ITC, sir, and immediately you are selling. Then what? Government, for government that ITC is a loss, right? So what they are saying means, once you sell say capital good, you need to pay tax. How much? That sale value into tax rate, one thing, or see, transaction value into tax rate, or originally how much ITC you availed minus 5% for each quarter used has to be subtracted. How many quarters you used? That many quarters into 5% you subtract the balance amount or the sale value into tax rate, whichever is the higher, you have to pay on sale of a capital good. Sir, are you able to understand, sir? Okay, so let me solve certain examples or questions related to this part, sir. Sir, question number 3, you can mark it. So there is nothing here. I'll just tell the important point what is also. Sir, here the important point only thing is like, in this question they'll talk about normal loss and even abnormal loss also. In blocked credit, what we have discussed, when the goods are destroyed, lost or stolen, we cannot avail ITC. There is normal loss, which is also like, okay, goods are like destroyed or lost. Even abnormal loss is also there. But with respect to normal loss, there is no restriction, sir. Only with respect to abnormal loss, only 17 subsection 5 blocks the credit. So with respect to normal loss, will not restrict anything credit. Only with respect to abnormal loss, we cannot avail ITC. See, on 10th October, there is 2000 kgs dispatched, but received how much? 1998. The 2 kg is normal loss. So don't think of it. So you can avail ITC on total 2000 kgs. 2nd November, how many kgs? 5000. How much is the normal loss? 5 kg. So normal loss now you need not to consider. You can avail on 5000 kgs. Then 3rd December, 3000 kgs. How much is the normal loss? 1 kg. This is fine. But there is abnormal loss of 20. So with respect to this 20 kgs, you cannot avail ITC. Sir, here what happened? Goods were sent in lots. You can avail ITC only on receipt of what? Last lot. When it is received? 1st Jan. So on 1st Jan only you can avail ITC. Can you avail for total 10,000 kgs? No. How much is the abnormal loss? 20. So if you subtract that, only with respect to 9,980 kgs only you can avail ITC. So 9,980 into 100 into 18% you can avail as ITC. How much, sir? 1,79,640 you can avail as ITC. Sir, look at question number 6, sir. Question number 6. So we solved question number 3 and then we are solving question number 6. Sir, XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2018 from the following particulars. What? Input A, 1 lakh. Okay, on the GST is how much, sir? 1 lakh. But what happened? One invoice on GST payable 10,000 was missing. So the 10,000 you cannot avail. How much you can avail? 90,000. Then input B. Inputs are to be received in 2 installments. Whereas first installment was received in October, the second installment is yet to receive. Can they avail ITC, sir? No. Only on receipt of second installment they can avail ITC. Okay. Then capital goods, 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST. Can they avail ITC, sir? No. Which section, sir? 16 subsection 3. So okay, if they capitalize even the tax part and avails depreciation even on the tax part, then they cannot avail ITC. Then input service, 2,25,000. Okay, sir, here don't include 16 subsection 5 because this is related to 2018. Now there is an extended time limit given under 16 subsection 5. Sir, this point is related to what? One invoice dated 20th January 2018 on which GST payable was what? 50,000 has been received in what? October 2018. Sir, actually they cannot avail ITC. Why? Because for the financial year 17-18 annual return was filed on 15th September only. Sir, as per 16 subsection 4, what is the time limit for availing ITC? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Here annual return filed on 15th September itself. So if you compare 15th September, okay, so the ITC is, they found out the invoice only in October. By that time already time limit has been expired, so they cannot avail ITC. But if you invoke 16 subsection 5, what is 16 subsection 5, sir? For the year 17-18, 18-19, 19-20, 20-21, the time limit is still 30th September 2021. If that's the case, they can avail ITC. Okay, so here simply you keep a point like 16 subsection 5 not considered. Okay, but if it is like a exam question, sir, you consider 16 subsection 5. Here 16 subsection 5 not considered. 16 subsection 5 not considered. So okay, if considers, what happens, sir? See, this one will be there. Okay, input service, the 2,25,000. Sir, what happened here? Out of 2,25,000, 50,000 only invoice not there. So that means they can avail what? 1,75,000 normally. But if at all 16 subsection 5 is considered, then they can avail what? How much? 2,25,000, because 16 subsection 5 gives extended time limit till 30th November 2021. In that case, the answer will be 3,15,000. 3,15,000. Okay. So look at question number 11. ABC India is engaged in the manufacture of some taxable goods. It purchased the following goods in the month of October. In the month of October, see. Raw material used for production of final product. ITC available or not available? Available. Goods used for generation of electricity. For captive consumption, sir. Captive consumption, they generate electricity and they use for their own purpose. Still it is what business related only, so they can avail what? ITC. Okay, then goods used for providing free warranty. Sir, they are selling some goods, so the goods are under warranty. So when any repair comes within the warranty, what they have to do? They have to replace them. So where any goods are provided under the free warranty, on them also they are used for what? Business purpose only, ITC available. Then light diesel oil. Light diesel oil, petroleum product, sir. What are called petroleum products? HP man, H means high speed diesel oil. So this is what? Light diesel oil. So high speed diesel oil is only petroleum product. Light diesel oil is not a petroleum product. So on this ITC can be availed. But if you could see note, ABC also purchased high speed diesel oil. On that, no ITC available. So what is the total of ITC, sir? 1,35,000. 1,35,000. Okay, so this one. Then before going further, sir, we'll solve even question number 9 also. So what is the question number 9, sir? Avini Limited filed GST return for the month of January on 11th April. Original due date for the said return is how much, sir? 20th February. It's okay. Actually the due date is what? 20th February. But the details of tax assessed and payable for the said month are like what? Tax payable 1,80,000, 1,80,000. Tax payable under RCM 40,40. ITC 70,70. Sir, ITC we can adjust with what? Only with the outward tax liability only. So if you adjust here, how much still? 1,10,000, 1,10,000. Plus RCM how much is there? 40,40. So total how much is still payable, sir? 1,50,000. 1,50,000 is still payable. By when? 20th February. But what assess the net tax payable in cash, as well as the interest payable for the delay in remit to tax. But when they remitted, sir, did they mention the date, sir? Okay, they remitted on when? 11th April. But actually it has to be remitted when? 20th February. So how many days delay is there, sir? Sir, 2024 is a leap year. 2024 is a leap year. So in February, how many days will be there, sir? 29. So due date is 20. After due date, how many days are there? Like February, 9 days. March, 31 days. And it was paid on 11th April. So total, how many days delay, sir? 51 days is the delay. So what you have to do? Total 1,50,000 into 51 divided by 365 or 366? 366, and the interest rate is like 18%. How much? 1,50,000 into 51 by 365 into 18%. 3,762. So this interest has to be paid. Along with that 1,50,000, even interest also has to be paid at what? 3,762 and 3,762. Then, assuming that the concern has ITC balance of 2,50,000, then compute the interest payable. Sir, if the ITC is 2,50,000, then also they have to pay still 40 and 40 in cash. Why? Because RCM liability cannot be adjusted through ITC. RCM liability shall always be paid through what? Cash. So this 40 and 40 has to be paid even in the second case. So 40,000, 40,000. So then what is the interest, sir? 40,000 into 51 divided by 366 into 18%. How much? 1,003. Okay, that's the interest payable. So, okay, we solve what? Question number 9 also. Then we solve question number 11. Then I am moving on to question number 13, sir. Question number 13. See, XYZ is a registered supplier, supplies the following goods and services for construction of buildings and complexes. First one, excavators. They supply excavators. Excavators are nothing but JCB machines. It's okay. Then manpower for operation of those excavators, and they do even soil testing, seismic evaluation, all these three also. Okay. And then they receive following services. Sir, the services they provide are what? They'll rent these excavators, and then they provide manpower to operate those excavators. And the third one is like what? They do soil testing also. Then they receive what? Annual maintenance, health insurance and all this they'll receive. So now see, what is the hire charges for excavators? 18 lakhs. What is the service charges for manpower? 20,000. Service charge for soil testing? 2 lakh 50. And they have inwards what? Sir, annual maintenance of excavators 1 lakh. Can they avail it as ITC? Annual maintenance of excavators, they can avail as ITC or not? Yes. Then health insurance for excavators. Operators, sir, health insurance. Blocked grade, under blocked grade if you see, health insurance is there. So health insurance is a blocked grade, not available. And then scientific consultancy for soil testing and seismic evaluation. Nowhere mentioned in blocked grade. So this is also available. So total ITC available is how much? 2 lakhs. Find out what is the tax payable, sir, here. Find out the tax payable. They given tax rates here. They given on the tax rates here. Find out the tax liability. Find out the tax liability before adjusting ITC. Find out the tax liability before adjusting ITC. Sir, what is the tax liability, sir? 18 lakhs into what percentage? 12 percentage. How much? 2 lakh? 1 6. Then 20,000 into what percentage? 12 only. Why 12? Sir, why not 18, sir? Because actually on manpower and soil testing the rate is 18 percentage. But, sir, most of the people will do wrong only here. Why? Because they are given separately tax rate as 18 percentage. But what the logic we have to understand is like, sir, usually we see commonly also, nobody will send excavator alone, because excavator, it's not something easy to operate on all. So along with excavator, they do even provide manpower also. So both are like what? Naturally bundled. So it becomes what? Composite supply. So what? To 18 lakhs and 20,000, both are like composite supply. Since on this 20,000 also 12 percentage only. How much, sir? 2,400. Whereas on this 2,50,000, sir, 18 percentage. How much? 45,000. From there, if you subtract the 2 lakhs as input tax credit, then the final tax payable is how much, sir? 2,63,400 minus 2 lakhs. The tax liability is 63,400. 63,400. So 13 also we have solved. So all these are like blocked grades only, sir. You can do it like simply also. Then these are like rule 42, rule 43. So that we not yet covered the concepts. Then come to question number 25, sir. Question number 25. Question number 25. OK Bank has availed credit of 25 lakhs in the month of December. Total credit of out of which like 5 lakhs pertains to non-business, 7 lakhs pertains to credit availed under second proviso. Sir, second proviso na nothing but from their distinct persons. Okay, here if they refer to second provisional, nothing but it is what? They received from their distinct persons. Find out the total ITC eligible to OK Bank. Sir, what is their total? 25 lakhs. Out of 25 lakhs, how much is from their distinct persons? 7 lakhs. 7 lakhs they can avail what? 100%. Then balance how much is there, sir? 18 lakhs. Out of the 18 lakhs, how much is ineligible? 5 lakhs non-business related ineligible. Then balance how much is there? 13 lakhs. So 13 lakhs into 50% na 6 lakh 50. 7 lakhs into 100% na 7 lakhs. So total ITC available is how much? 13 lakh 50,000. Okay, then one more question, sir. Like that capital goods question also. Come to question number 30. Come to question number 30. What is here? A sold plant and machinery after being used in the manufacture of taxable goods for how much, sir? 4 lakhs. When? 1st November 2018. The GST is payable on the transaction value at a plant and machinery at what rate, sir? 18%. Then it was purchased originally when? 22nd November 2017 for how much? 5,50,000 on that GST 18%. Now A Limited availed the credit also. Now they are asking the tax payable as per 18 subsection 6 when the machine is sold. How to solve, sir? Sale value into tax rate. What is the sale value into tax rate? 4 lakhs into 18%. How much? 72,000 is one option. Or one thing. Second thing is what? Total ITC availed minus 5% for every quarter. Sir, what is the ITC originally they availed? 5,50,000 into 18%. 99,000 they availed. From there we need to subtract 5% for every quarter. So how many quarters they used? 5 quarters. Sir, quarters means you cannot check like year to year, sir. Quarter means always a period of 3 months. Which 3 months? Like Jan, Feb, March, April, May, June, July, August, September, October, November, December. So only these 3 months only called as quarters. Here in 2017 they used already November, December. Okay, that quarter 1. And in 2018 they used all the 4 quarters. So part quarter also has to be treated as like a full quarter only. So total 5 into 5%. How much? 25% subtract from 99,000. How much, sir, net? 24,250. Okay, if you subtract, then it is like what? 74,250. Which is higher, sir? 74,250. Then 74,250 is only the tax payable. 74,250 is only the tax payable. Okay, na, sir? Sir, then we still have here, sir, some important concepts like Rule 42 related, Rule 43 related, and 18 related also. So that one, tomorrow we're gonna discuss that part, sir. So once we complete that, and then only we'll go to the TDS TCS part. Okay.